Welcome back to TradeDelicious Live. It's morning briefing. It's 8:30 a.m. Let's get into a little bit of morning briefing. This is a show where both John and I, we're going to debate different positions. We're going to talk about some of the fundamentals, and we're going to get you up to scratch with everything that you need to know. Good morning, good morning, good morning. It's morning briefing. It is just gone 8:30 a.m. It is June 12th today. Happy Wednesday, John. How's your morning treating you?
Yeah, really good. Really good. I've been up bright and early today. Hit the gym nice and early. So I've been up and out, feel quite up for it today,
Oh, he's up for it. He's up for it. All right.
Get the brain going, get the juices flowing, as they say.
I
got the coffee on the go.
Yeah.
Yeah. It's going to be a long day today.
CPI and FOMC on the same day. Last time this happened was in 2021. It's not overly uncommon. We've had it 10 times since 2015. And I'm going to run you through some of the things I've discovered and some of the statistics. I've got a trade idea from it. I know.
Oh,
Who
okay.
would have thought we'd trade around CPI and FOMC on the same day? But I do have a bit of a trade idea. But good morning. Good morning to everyone in chat. I've seen Musclays come in for the quote of the day. Are you ready for the quote of the day, John?
I'm ready. I'm ready. Give it me. I need it.
Dalai Lama has come in. Disappointment is the bridge between expectations and reality. Learn to cross it gracefully, for it leads to personal growth and wisdom.
I really
Such
like
right.
that. I know.
Such right.
Do you know what? I'm liking this. It sets my day up as well. I come in and I just get a little bit of a, I used to have a quote on my screen as my desktop, which was always just trade smart, not often. Um, and I always kind of think about that. Whenever I go into the market, I always think trade smart, not often. Don't try and over leverage. Don't try and chase a market. Just be smart about it. Think about what's happening. Think about, are the conditions met? And then, yeah, if it is, breathe. Take a deep breath, then take action.
Yeah, I like it. Smart, composed. Has it worked
Yeah.
for you?
Yeah. Yeah. I'd like to think so. I'd like to think so.
I would have loved for you to say no.
Yeah. No. Yeah. Yeah. Awful.
Yeah, just
Awful.
no, horrible. No, over
Yeah.
leveraged, opened twice as many positions. It's
Yeah.
just you can't win. But
Yeah.
no, that's good. It's I think that's what our daily reminder here is, just Musclay giving us these ones. But I'm liking it. You know, some have hit, some have missed, and I'm liking that. I'm liking the kind of, I got no idea what's going to happen. I sat today for about 4 hours prior to going live here, right? While I've been in the office, I've put it up on the
Yeah.
big screen, waiting to see when he puts it in the chat.
Oh, okay. So do we
I've
have an
been waiting.
official time?
I don't have an official time. I've missed
Okay.
whenever it comes through, but I
Right. Right. Right.
believe it is within half an hour of us going live. I've just been sitting here watching to see. And now he's going to challenge me, right? He's gonna come in tomorrow, or he's going to do tomorrow's now, and just be like, "You're
Yeah.
wrong,
Yeah.
Jordan." There, but I like it. Look, today's a big day. Today's a big day for trading. Today's a big day for the US dollar. Today's a big day for the pound. We can look across a number of different things and understand why this is a big day. But today's a big day because I want to challenge something. And I've put this in Discord this morning for Patrick, Stephen, Musclay, Paul. Sorry, I really couldn't get that word out. They're not even a tough name to say, but I couldn't get Paul out. For all of you guys, you would have seen the Discord message. I want to go for 500 live chats today. Okay. So recently we've averaged around that 200 to 250. And what I mean by that is you guys typing in chat. Today, I want to see if we can hit the mark. I've briefed the team. We're aware. We want to chat with you more. We want it more interactive. Will and Rich are going to try to be more interactive. We really want your input to know what you're trading, to know what you're looking at, and to know what you want to chat about. So throughout today's morning briefing, if you have an opinion, I want to hear it. If you have a comment, I want to hear it. If you disagree with something we say, I want to hear it. It's a bit of a challenge. We want to see if we can pull it off. Let's go for 500. Steven's come in and said 10. Sure, let's go for 10. We got to get 10 to get to 500. That works, right? But good morning, Andrew, as well. Welcome in. But John, before we jump into CPI, before we jump into FOMC, and before we jump into the US dollar, there is something that we should touch on. Obviously, GDP print for the pound to come out about a little over an hour and a half ago. Do you recognize this, John?
Is that Litchfield? Is that Litchfield? Oh my god! Oh my god! I need to maximize my screen a second. Let me look at that beautiful cathedral right there. Let me.
I was.
How do I pin that again? Okay, pin that. Oh yeah, there we go. There's those spires that I like.
I sat here and I was like, I need to get a British GDP print come out. And I was just going to go about it to see if you recognized it or not, but I couldn't help myself. I couldn't help myself. Yeah, I've got to put Litchfield up, right? So Litchfield Cathedral sitting stand there. But nevertheless, it is obviously the number one manufacturing town in all of Britain. They do everything there in Litchfield. But no, I'm winding you up. But GDP come in bit of mixed figures.
Yeah, a little bit. Little bit of not a surprise to the market. A lot of it came in. sort of forecasted. A little bit down on was it the manufacturing that came down? You posted it to me earlier.
Yeah.
So we had a little bit down on the sorry, manufacturing production was up. We had industrial production down and construction output down as well. So this is all just kind of pointing to that GD print that was lower. That was expected anyway. And we've got this kind of signs of weakness now coming into the UK economy. There was a lot of potential growth prior. We were having a few kind of hotter prints the past couple of months, and that's kind of led to that pound that kind of ripped higher a little bit against most of the other currencies. That could be starting to change now. We're starting to see those GDP prints coming in lower. We've had an increase in unemployment yesterday as well. That's signs of potential shrinking going on there. So I'm guessing this is going to move more towards the Bank of England, which are, they are looking to cut rates. There is a probability, that we are going to see a 25 basis points cut in September. So I'm kind of looking at pound now, thinking this could be a good time to maybe be on the short side of pound against some kind of stronger currencies. But it's what currencies really strong at the moment. That's where the pick is. What currency can I lean into and say that currency is really strong? The only one I can see that I think's sort of starting to dominate the market. We have the US dollar and we have the Swiss franc, potentially the yen. We have touched upon the yen previously as well, where there could be some opportunities if the Bank of Japan this week do start to do some bond tapering or do start to talk a little bit more hawkish about the way they're going with their monetary policy going forward, then that could be a nice opportunity as well. So I did actually do a little bit of analysis on pound yen yesterday, and I did like the idea of being short towards the sort of highs. So yeah, I like the idea of maybe like a pound yen sort of move. But yeah, it's trying to identify now, is that an underlying weakness in the pounds? How do we then trade that position? How do we try and find markets to trade that against? So that's what I'm going to try and look for in the next kind of couple of days, few weeks, maybe just try and find positions within the markets, because you do have to find that balance, especially if you're trying to trend trade, right? I don't
Yeah.
know if anybody in the chat trades with the trend, or I don't know their trading styles. Let us know. But if the trend is your friend, essentially, for most traders, then you're going to be looking to try and trade a currency that is strong against a currency that is weak, essentially.
Yeah.
So we've got to try and balance that, and the way we can do that is by using those kind of macro outlooks. What economies are getting stronger, what economies are getting weaker, and try and trade that difference. Is essentially what we're trying to do on a daily basis. So yeah, I like the yen, like the Swiss franc at the moment. So maybe pound against those could be something good to look at. What do you think?
Yeah. My analysis the past like week macro wise has just flipped.
Yeah, switched. Yeah,
I was what I was, and that's the beauty in macro analysis. It can, all right, one data print changes the whole picture.
mm.
And that's really what I've felt. I've seen a few guys jumping in. Andrew's still holding silver long. I'm proud of
I'm
you.
impressed.
I'm out of those silver long positions. But
I am impressed.
even Stevens come in and said, I don't trade Japanese yen. It's too random. Stick with that. I like that. I like that. But yeah, when looking at because I was looking at Euro longs, and since the election's been announced, I haven't read into that anymore, but I've stopped looking at Euro longs. We've got
Yep.
obviously the US dollar. I think the US dollar is going to remain pretty flat. While most things are starting to point to US dollar weakness, it seems to be holding its weight. And investors are happy in the dollar, or at least feel safer in the dollar. I was
Yep.
looking post this Macron news to be going short EG, Euro Great British Pound, because I thought we'd
Nice.
find
Yeah.
some strength in the pound
Yeah.
against that euro. So I was looking at that, but now I'm not overly convinced in strength in the pound. So
Yeah.
that's the question we ask every day here at Morning Briefing is what is the trade? Short answer, I've got no idea. I thought the trade is Euro Great British Pound. I've evidently missed the entry for those shorts because that thing's moving and moving quite quickly. And I'm not one to chase the analysis. You know, if it's gone, it's
Yeah.
gone. I'm happy to let it go. So I'm a little disappointed that I missed. I thought that was the play. Turns out it was the play. But now that we get this GDP print, and I'm not overly convinced the bullish pound is going to be a strong move, depending on how your bond market goes. But then even change of government is looking likely. I don't think I'd know one British person that's come out and said I like Rishi Sunak. So I don't know. There's just so much uncertainty there that I don't know
Yeah.
where to put my money.
Yeah, it's difficult as well. I think as well the pound is going to be a tricky market to trade coming into the election. You're going to see polls being released, and the market's going to move on polls. You know, if we see any kind of significant changes, I think the polls are pricing in a Labour sort of majority at the moment, and a kind of clean sweep for Labour. And it might not be the case. We are seeing the old Nigel Farage get back out again on the buses and get rocks thrown at him again. So he's he had milkshake over him last week, I think it was, and then he released a TikTok saying, "All my milkshake brings all the boys to the polls or
What is
whatever."
it
I don't
with
know.
food being thrown at politicians? It seems to be such a we get it here in Australia, get egged.
Yeah, yeah. And I mean, they deserve it, but that's but yeah, no, so and there is a potential for reform to to maybe shake up a few things again. It's almost
Mm,
like the Brexit thing all over again with that. Lib Dems are actually growing slightly as well. I think the Lib Dems have actually talked about trying to re-enter the EU again, so that could be something that tries to swing a few people as well, swing a few votes. So it might not be the Labour majority that is the polls are suggesting, and then if the polls start to kind of reflect that going towards the event, that uncertainty is going to cause a lot of volatility, and the swings in the pound is going to be something to behold. I think it's going to be quite an interesting thing. Personally, I think if a Labour government comes in, the pound goes, the pound dips, just because it's a change that we haven't seen in a while. The last time they were in, the pound underperformed. So there is a idea that that just minor shock initially, we'd see a little
yeah.
bit of a power move. I couldn't say long term because
Who
I
who
wouldn't know,
was
but
the last Labour prime minister? Do you know?
I believe I'm gonna butcher this now. I'm gonna say it
Chat.
was Gordon. Gordon, no, it wasn't Gordon Brown, was it? Was it Gordon Brown?
I've put you on the spot.
That chat, no,
Like
yeah.
I've got no idea. But chat,
I'm pretty
who
sure
was
it
the
was like,
last
wasn't it like
Labour prime
14
minister?
years ago?
Yeah, well, which would have been 2010.
Oh, I was right.
Oh
Gordon
yeah,
Brown. I was
Gordon
right.
Brown. Gordon
Yeah.
Brown. Okay.
And that was in
Okay.
2010
Yeah, 2010.
because it was obviously Tony Blair before that.
Yeah.
And then Gordon Brown came in.
Okay.
And then
Okay.
it was going to be the brothers, weren't it? I can't remember their names. But they didn't win in the end, and David Cameron, I think, won. Was it Ed Miliband? Maybe. Yeah, maybe. I might be butchering all this.
yeah, we're talking about US politics, by the
Yeah.
way. But no, I'm just trying to get an understanding, because we've got EG up on the chart here. And as I mentioned, this is the kind of the play that I wanted to see. We got under those 85 levels based on, and then earlier this week, obviously with that gap market from the Macron announcement, we've just not stopped running down, which is really what you want to see. And for me, tells me that my macro analysis is right to change.
Yeah.
When I see some data point which leads me to question my original analysis, it leads me to go, hey, maybe we're wrong here. If price runs fast and strong, that confirms it for me. It goes, okay, I'm not the only one seeing this. We're seeing larger amounts of money agree with me here, and that's what we're seeing in EG. So maybe if we pull back around to the 85s or the 84 nines, I can try and find an entry, but I don't want to short it where it's currently trading at.
No, absolutely not. Again, we kind of talk about this all the time. although our sort of macro analysis might lead us to this kind of idea, we've still got to be able to trade it, and we've still got to be
Yeah.
able to make decent returns off of it. I'm not going to take a short position here. And, again, I always say, where's my safe stop? I always think, where the hell is my safe stop?
Which is a
And
safe
it's,
word.
yeah, 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 above there, yeah. So I'm looking for like stops above those highs. So really, if I can try and get an entry as close as that to possible, then great. Plus, the macro still has to make sense at that point, and the fundamentals still make sense by that time. And that could be days, maybe even weeks away if it does get back to that point.
If
So yeah,
Yeah, if this macro drive is as strong as we think, there's a good chance we won't come back to the 85 for a little while.
exactly.
And so the trade might be done and dusted. We might just be talking about past tense. There's a
Yeah.
very, very real possibility, but I guess that's another clue in itself. Next
Yeah, and
trade.
if that's the case, then you feel like the market is on its way down to this 84 handle, and you're confident that it is, you can day trade it. Yeah,
Yeah.
there is an option to do that as well. We're just talking about sort of longer term swing ideas, but if you're looking at sort of trying to play this to the downside, I'd be looking at sort of, I like holding this 50 moving average. You can see that we're kind of holding that now. If we could breach lower here, maybe it could be a good idea to start looking for positions. But again, when I day trade, my risk goes from like, trying to risk maybe 0.5% to 0.75% on my original position. It goes down to like 0.25, and I'll try and trade at that because the likelihood of you getting stopped out is higher. So, I try and reduce my risk if I'm going to go down and day trade.
Yeah, I agree. Andrew's come in and said, yeah, perhaps an EG short at the gap would make sense to me to get back up to the gaps. Yeah, it's going to be tough to get it back up to those
Yeah,
gaps
the
like we
gap's like up
discussed.
here,
But
isn't it?
yeah, the gap markets in a lot of the markets were printed there. Look, let's get into the big thing of the day. All right, CPI, FOMC on the same day. I've done some data analytics. I don't know if you're a fan of data analytics, John, but I am.
Yeah, man.
Data tells me everything, right? So I've been having a look through with the help of the first time, the help I've been doing this data analytics with the help of AI.
Oh,
I've
okay.
actually been doing it, which I don't know why I've never thought of doing that. I've just realized how easier my job's going to be now, but I thought I'd have a look into it. So I've been having a look at when the last time I started off by having a look at when the last time we had CPI and FOMC land on the same day. 15th of May, 2021, last time we seen that come through. And then I've had a look at the last 10 times we've had it come in. We've had one in 2018, one in 2021. We had it 3 times in 2017, 3 times in
Hmm.
2016, and from going off the last 10, we had it twice in 2015. It's a good chance we probably had it more often in 2015, but I'm going off of the last 10. So we've seen this fairly frequently over the past 9 years. Okay, almost once a year on average over those years. We haven't seen it recently, which is fairly new, and why probably it's such a big deal to most people that these are landing on the same day. So what I wanted to do is have a look at the average movement that's caused, obviously, with these statements back in 2015. CPI no one cared about. FOMC was very predictable. No one cared about because CPI wasn't doing anything. You look at that compared to now, a little bit different. Everyone cares
Yeah.
about it. Everyone's looking at it. So you need to judge these movements correctly from a open to kind of the, sorry, let me get the right data here. For looking at Euro US dollar, the average range from high to low throughout the day over those days was literally 5 to 8 pips in the average range of movement.
You're joking.
No, not so not the whole
Wow.
day. The average
Yeah.
range of when we were doing the moves was
Yeah.
between 5 to 8 pips. So we weren't
Oh,
getting
okay.
these massive 50
Yeah.
pip runs that we're seeing these days over the average. But this is what I really, really wanted to talk. Now, general, the Euro US dollar experienced a positive change, right? So it would close higher than what it opened over those 10 dates, but I don't think that's enough data to go off. But what
No.
I found really interesting is both in the S&P 500 and the Euro US dollar over the past 10 times we've had this, 100% of the time, okay, over these 10, well, if we're using S&P and Euro 20 times, 100% of the analyzed instances, the FOMC meeting minutes moderated, okay, or reversed the initial CPI movement.
Okay.
Almost every time the CPI has caused a movement, the FOMC meeting minutes has moderated or reversed it.
Right. So we're saying if there's like a hot CPI print, the FOMC are going to come in later and say it's just an outlier. It's not something to be worried about. We still see inflation coming back down to X, Y, and Z. And then we flip.
I'm just telling you the data, John. I'm just no.
Oh,
Yeah,
now because I'm
essentially.
thinking, where's the trade? You've hyped me up now. I'm thinking there's a trade in that.
So when we have a look at the S&P 500, if when there's an initial negative response from the CPI, which has been very common over the past 10 years, that CPI, we get an initial negative response. When the
Yeah.
FOMC's policy stance come out, it calms the market and pulls it back to pretty much break even. All right. If anything,
Right. Right.
closing a little bit higher.
Okay.
Same thing happens in the euro, but the other way around.
Yeah.
Almost both times we get this overreaction into CPI, FOMC prints, and it comes back to the mean. Most of the time, euro US dollar closed very, very close to the opening price on these days. It's almost
Okay.
like CPI prints when we move, that's the top or that's the bottom, trade back to the mean. I think that's the trade.
Okay. I like that. I like that.
Trade back to the mean. Let
Trade back to the
CPI
mean.
run rampant. Let's trade back to the mean.
And what?
Based
And
on the
so
past
you
10
do
years,
that
which
on the. Sorry, you carry on.
that's based on the past 10 years, which isn't a lot of data,
Yeah.
right? It's very important. That's 10 trades, right? Yes, 100%. 100% of the time that's happened, but it's only 10 trades. It's a very small sample size, but it is something, it could be a trade. If we get regardless of what the CPI print is, if we get a move today in the euro or the S&P, in particular, a negative move in the S&P, going into the FOMC meeting minutes or even the policy statement, depending on which one you care about, I think the meeting minutes will probably have a little bit more push. Going into that, it could be a good time to fade that move.
Yeah, I like it. I like it. So that would just be strictly S&P euro you'd be looking at in terms of any kind of ideas around an opportunity.
Yeah. Yeah, to be honest, I'm leaning towards euro. Yeah, fading day today. Statistically, we see these days. You have a look at the open value, have a look at the close value. There's not much. It
Mm,
looks like it was a really boring day, but you have a look at the intraday volatility, and
yeah,
it kind of moved a lot. And
yeah,
if we're to expect that now, these events mean a little bit more compared to 2015, 2016, and 2017, right? These are a
yeah,
little bit more volatile now. Will it still play through? Don't know. Don't know. But if we get a big outside move way away from the median post the CPI print, I might look to fade it back to around the opening prices.
yeah. There's a decent time between the events as well, isn't it? It's like
Yeah, plenty of time.
6 hours really, like before you see the move. So yeah, there's plenty of time to think about positions, think about maybe how you could fade back to a mean. Maybe it could be I identifying some highs and lows that have been broken or been formed throughout the move on a lower time frame that could be retested on a mean reversal. Yeah, definitely. I like mean reversion. Mean reversion is something I like to use all the time. So that to me just rings bells to maybe have a little look into it. Again, don't bet the house on it. That's not what you do. Even
No.
though Jordan said 100% of the time, that is not, that is just over a small set of data.
Yeah.
So 0.25%. I'd be happy to look at something if we did see a move. So who knows? Maybe I'll come on tomorrow morning and be like, Jordan, I nailed it yesterday with S&P longs and shorts on euro. So I'm gonna have a little look into that.
I like it. Look, the reversal frequency 10 times in the euro, 10 times in the S&P. Across those 20 instances, 100% of the time it reversed the initial move. When I'm saying 100% of the time, it doesn't mean it's going to work tomorrow. It doesn't mean it's going to work today. It just means statistically over the past 10 years, it has worked 100% of the time. Okay. If the way analysis I like to use is a horse. If a horse has won every race in his past 10 races, it's probably going to be short odds. You're probably going to back it into the 11th race. Does it
Yeah.
mean it's going to win? No,
No.
it doesn't. Right. But it has technically got a 100% win rate. That's important to understand when looking at this thing. But that's the trade idea. That's my trade idea for the day. Euro, bit of volume from the CPI. Hopefully, if we don't get volume, I'm not doing it. Only if we get volume from the CPI print. And the only way we get volume from the CPI print, I think, is if we miss a little bit on the figures. And then yeah, the Jerome Powell will come out and be like, it's fine. We expected it. Don't read into it. It's nothing. And everyone will calm down and prices will revert.
I'll be interested to see then if the CPI print closes the gaps that we formed in the market. That would be quite interesting. We
With the
do have
euro.
a large option expiry today, 2.1 billion at one spot
Oh,
zero
see,
eight.
now this is getting interesting.
Yeah.
2.1 billion up the high there. What you've drawn out, 108.
Yeah, that 108, there's a 2.1 billion option expiry today. So
Oh,
I think if the market goes towards that, that could be a good level to
I
see
think we will.
maybe a defense of that, you know?
Yeah, 1.08 might be an absolute magnificent short area today. Fill the gap, get the options expiry, and then reverse into FOMC. That could be the play. That couldn't line up any better.
Yeah, yeah, I
Which
quite
is
like that.
probably a red flag.
Yeah, yeah. I mean, there are some other option expiry levels throughout the week that are quite large as well. There is a 1.0780, which is just a little bit lower, which comes in around here. That's tomorrow though at 1.6 billion. And
Mm.
then we've got a 2 billion that's expiring on Friday at 1.09. So that might have been a short play from up there. So that's quite interesting to see. There's actually a
That's a
big
lot of
option
money up
expiry
at
today on
109.
Aussie as well.
Yeah, I'm really surprised at the amount of real capitalization that goes into the options in the
Mm.
Australian market. It's bigger than a lot bigger than I thought it was.
Yeah. So I'm just bringing up that. So it's 0.6615, which we're
We're
actually
trading
sort of
at.
trading at right
Yeah,
now.
but that's fine.
So that'll be interesting to see how that one plays out today. So the market kind of can sort of hold around these levels, create some price action, and then you could see either sort of moves from these kind of areas. So it'd be interesting to see. It looks like is the market kind of prepping itself to kind of fill that NFP drop that we've had. Because a lot of the times we get these kind of big news moves and the market can kind of retrace those moves. So, maybe again, like the CPI print could bring prices back up towards that kind of pre-NFP levels. And then, like I said, FOMC might drag it back. So that's an interesting
I'm
thought
calling
for
it.
today.
CPI print up to 108, shorting, putting the house on it,
No,
shorting down to.
do not do that.
No, but I think that's my trade of the day. I think that's my trade of the
Yeah.
day. CPI print up to 108 if it does in the euro, fill the gap, and then bring it back down to kind of open areas of where we're trading today, which will be like what 107.4s.
Yeah,
Where we at? No,
107.40 is we're kind of trading up.
yeah. Yeah, so that'll be my play. That'll be best case scenario. If CPI gets us up to the 108, I'll look to short that there back into the 104s.
Yeah. Sorry, guys. Do you use volume profile at all?
Yeah, every day in my day trading, it's
Okay.
my go-to.
Okay. Okay. So there's some large sort of low volume areas, obviously with the gaps there around that sort of area as well. So maybe something to look into.
I like it. Last final note from you, John. We had a question from RS come and say, where do you find the options contracts? What did you say the website was where you have a look?
I'll go to forexlive.com. It's a news website. They put loads of different news topics out, and every day, I don't know what time they put it out, but um, at least before sort of 7 a.m., they'll put a little piece out on FX option expiries that you can have a look at. It's in sort of like a chart, and they point out the ones to look at.
Beautiful. Beautiful. We run out of time. Once again, we do this so quickly. But John, it's been an absolute pleasure. We're just gone 9 a.m. in Britain. I'm going to send you over to two British guys who are going to go ahead and trade this market. Guys, remember the challenge. If you've enjoyed it, hit the like button. Let's get loud. Let's ask you questions. Let's react to what Rich and Will are talking about. Let's go for 500 live chat messages today. Let's see if we can achieve it. It is ambitious, but we're full of ambition here at Trade Delicious, and I know you guys are getting into the trading world. John, we'll see you again tomorrow for the Thursday session, and I'm looking forward to showing you all the profits that EU's got me.
Yeah, definitely.
Show why TradeDelicious is the place to be.
Bring it up. I'll bring it to you. You make so much money, you're now retired.
One, I'm not sure if these is or needed.
There's something off this kind of stuff.
Great segue there, Alan.
Back to the news. All news by the end of the year.
The thing is, that's great.
Stop using a break from retail.
Make sure you hit that like button.
Good morning, good morning. 500 messages. Who are we? Come on, 600. Let's make it challenging. 700, 800. I hope you're ready to get after it. We had a pretty good day on stream yesterday. We kind of needed that as we've been sizing up a little bit on the account. So we're looking to use that to compound the growth for what we get today. Markets are looking pretty clean, but we're going to get into this in a sec when we do a top-down analysis. But first and foremost, first opportunity to speak to Will this week. How you doing, buddy?
Good morning, guys. How are we doing? Rich, I'm not too bad, mate. I'm pretty good. I'm alive and awake. So I call that a win. I call that a win. How are you doing?
Yeah, no, solid here. I mean, how long is it going to take until you say you may or may not have caught a cheeky little trade that you sent to me? You never send me losers, mate. You always send me winners. You're like, check out this.
The only reason I sent you that one yesterday is because I felt like you. It wasn't a minus risk reward, but it was a 1-to-1, and I don't often do the 1-to-1s. And I think I had a 1-to-3 originally, but I went out, played some golf, and I thought, you know what? I'm not taking an L on a golf course. I thought I don't want that effect in my game, so I lowered the risk, or I lowered the profit target right the way down to a 1-to-1, where there was an imbalance. Where I thought, you know what? I feel like it's almost certain that in my eyes it's going to go to there. So I felt comfortable putting it there and just having it take away almost straight away. And as soon as I got to the golf course, it hit TP, and I thought, yes. So I thought, Rich, I'm sending you this.
It didn't just hit TP; it kept going. Like by the looks of it, it looks like you were just,
it carried on going right the way up.
Okay, all right. Well, let's have a look and see what we can see in the markets today. First of all, who have we got in chat? If you're in chat, give us a thumbs up or give us a hi. I'm just seeing what we got in chat. Good morning from Noel, saying good morning, Rich and Will. Andrew's in here as well, so good morning. Let's have a look at the charts. We'll do a top-down analysis today. We're going to be looking at GU, EU, and maybe even the DAX. But if there's anything you want us to have a look at, now's your opportunity to chuck it in chat, and we can always run through it. So these lines on the chart, they represent the high and the low of the price action today. This is the highest the price has been in today's session for me, so during the Asian session, and this is the lowest. So we're going to start on the 4-hour on GU. We're going to speed run this, make this nice and quick. Same kind of thing every single day. So if you don't get it in the first take, don't worry about it. We'll do the same thing tomorrow and the next day and the next day. So we're just looking at the market from the 4-hour, and we're seeing this huge bearish drive all the way down. Now I can see that the market is starting to make multiple legs to the high side, and the 4-hour now on GU is looking to really start to retrace some of this selling pressure. So this is indicating a little bit more than just sellers taking profit. This looks like buyers are actually starting to come in and really push the market up. So I don't see any trades on the 4-hour. We drop down to the 1-hour. We have this beautiful, this is a lovely way of reading price action. When you see candles like this, where the buyers say, we are going to push up very aggressively, and sellers completely overwhelm them, that gives you information to say who's driving price right now. Well, sellers are trying to drive price, and then we get a complete reversal. Now, for the market to move down from here to here and completely reverse this within 1 hour, that tells me that buyers are very active within this leg. Not only very active, they're continuing. They're continuing to the high side now. So this gives me an idea that the buyers in this price action, they're pushing, and they're pushing aggressively. So when we get aggressive price action, there might be an opportunity to follow on that move on a pullback. So I'm going to drop down to the 15-minute. We can see these beautiful 3 15-minute candles, each one getting bigger than the last. We can put a fib from this high to this low. I've probably done it. Yep, I have done it upside down. It's my party trick. It's like my trademark. We're going to go from the low to the high. So what I'll be looking for is keep trailing this up, finding the high of this move, and I'm going to be looking as the market starts to pull back. I'm going to be looking in this 50% retrace or better. So if the market pulled back from this high right now, I'd go ahead and simply put a box right on the 50 down to this low. My stop would be on this low, because if this is where the market can get to and push under this, I was just wrong about my idea. I think I'm right about the direction, but I'm wrong about timing that idea. And the reason I care about timing this idea is because I want to leverage it. If I can time the move, I can use a slightly tighter stop loss, and I can use all the leverage, which is what we were able to do yesterday on EU. As we actually had our biggest win on stream yesterday. So we're gonna. I'm not too proud of that. I want to make that bigger. So we took a $4,000 win yesterday. We got wicked out of GU. That would have been a nice move as well. But that is what it is. But I'm chasing it. Well, I'm chasing it. I think we can build this account to a size where we can do a 5-figure day on stream. That would be a $10,000 day or higher. So at the moment, we're just looking for the market to reload back into this zone. I'm going to go ahead and delete these here. In fact, I will leave the box on for now. So this is going to give me an idea of where I'm looking to be an active seller if the market retraces. So it'd be something like this. Market pulls back, comes into this price point, and potentially goes higher. That would make sense in my mind. So that's a top-down analysis on GU. Will, I realize I've done it again. I've left you with EU, but sorry, I should ask you, mate. I should be like,
no,
we got
actually, to be
last
fair,
time.
I think you did it the other way around last time. I was loving
did I?
EU. I'd already jumped on the charts and done a top down of EU, and then you went and did EU and told me to do GU. I was like, okay.
Okay, well, hopefully you want to do EU today. Just quickly, so we've got RS is in chat, Stephen's in chat, Frank, Patrick, Andrew, Noel, and favored. What do we got? High Delicious USD CAD. What's your analysis? Okay, we'll have a look at that in a sec. But first and foremost, let's jump into EU if you don't mind, Will. I'd love to see what you're looking at on that.
Absolutely. Let me just bring my chart up here so you guys can see. Can you see that? Okay.
Yes.
There we go. Fantastic. Yeah. So just on the 4-hour now. So if we have a quick look, ignore. Tell you what, I'll try and get rid of all this noise and all this mess. Right, so obviously, like we can see previously, I do like to look at the previous on the 4-hour just to sort of understand where price has gone recently. So as we can see here, we had this nice sort of high here, which as you can see, price sort of stumbled and fumbled its way up. Now, as you can see, price really did slowly move up to this sort of imbalance area on the 4-hour, creating sort of wicks to the upside, creating a bit of rejection, a bit of indecision, around this sort of area here. But we had those nice sort of push down. So we had those nice legs down. And then I thought to myself, right, okay. And then we had this massive news candle come in. And then price just absolutely sunk, taking out all these lows here. And for me, this was just taking out more and more liquidity. Now, I've marked this area up here as a point of interest for a liquidity sweep. Now, if I market liquidity, there we go. What we can see happen is it got wicked absolutely perfectly. So once this area here got wicked, what I'm looking for is some form of price to push up. Now, once we start to see price pushing up, drop down onto the 1-hour, and we start to see price forming. Now, we've created this low here, and we haven't actually managed to push below. So that would have been an indication for me on price direction, would have been to see whether we'd managed to look something a little like this, or whether we'd actually managed to see something a little bit more like this. Now, obviously, we haven't got that low. We've not broken the low, telling me that this was a lovely liquidity sweep, taking all internals and taking previous lows. So for me now, like you guys know, I love to watch the market rebalance themselves. Now, that means I want to see something around here, and that's relatively it. Maybe something around this area here. So these are my 3 main sort of points that I'm going to be looking at sort of targeting. Now, it doesn't mean that price is going to get to those levels, but it just means that I want to sort of see price moving up. So I'm in the run for buys at the moment. Now, if we jump down to the 50-minute and let's see how price is structuring. Now, if we have a quick look in. Okay, so what we see here is we're going to mark out the lows from the Asian session, which is what I love to do because I like to think about it as Asian liquidity. I like to see them taken. Now, let's have a look. We're looking around about here, I'm pretty sure. Yeah, we're looking around about here. Pretty sure that's the high. Yeah, okay, so that's the high there. We could take this high into consideration, but obviously for me, it's sort of 12 o'clock till sort of 7:30, 8 o'clock. That's why I like to see my sort of Asian range as. Now, however, we can look at this high just for the sake of taking into consideration highs. There we go. So let's sort of take this into consideration here. So now we've taken this high here. I feel like we could have some form of pullback. Like Rich said in GU, I like to see a pullback to get in on an entry. Now, I can also see price coming up to this area here, which again, it has done. So I can't see it going much further up before having a pullback. I maybe come up to here. And then what I'd like to see is something along the lines of price coming up from here, up here maybe, but actually I could see it pulling back from here also, come into this sort of area and then continue up. Now, however, I'd like to see what price does around about this area because there's absolutely nothing stopping it from taking this liquidity here. So what we could end up seeing is it running the lows down here, then we start to make our move up. But I think we'll see that within the stream. I'll probably put an entry around about here somewhere. I'll probably jump in on an EU buy around here. And then what we'll see, I'll put my stop loss probably around here somewhere to give myself a little bit of chance if we do take this low. But if we do take this low, you'll probably find I'll even scale in on a buy down here somewhere. So that's my sort of top-down sort of analysis, just quickly on seeing what EU is doing. I'd like to see it come down to probably around this area here, and then see if we can get some form of rejection around this area and start to look for buys up. So that's on the 5-minute anyway. On the 15-minute, it looks a little bit clearer. You can sort of see less noise. I'm not going to jump into the 1-minute unless I want to really refine my entry, just because, like Rich likes to point out quite clearly, there is a lot of noise on the 1-minute timeframes. So I'll try and avoid that until I really need to if I'm going to refine my entry a hell of a lot. So yeah, Rich, that's my EU. What's your thoughts?
I like it. I like it. I think we're looking at very similar things. You talking about the Asia lows being run today. I've actually positioned myself for this exactly already. I've started loading up on sells on EU. I'm looking for the market to just expand at the moment on EU to the high side, and I think it's drawing in liquidity just sort of into these levels. So I've gone ahead and put in sales. I'm hoping this high. I'm hoping. I don't want to use that word. My analysis is that this high is going to hold. So I'm looking at my stop loss being on 1.0774, and I'm looking to sell this now. A market entry on 0752. So we're up about $10 on this. It's nothing crazy. It's around about half a pip. We're looking for the market to actually pull back and take out this significant low. I wonder if there we go. That's a better view. So I've got an alert down on this low, and I'm positioning myself where the market could take this. And I reckon we take this. I reckon we go to the upside. That's what I'm going to be positioning myself for. So I'm going to try and short this into a long. Now the short is a grade B. It's something I'm willing to scale in, not put too much in, maybe sort of half, maybe 0.75% if the market runs against me. If it takes this high over to the left, which is 0773, I'll be looking for, okay, I'm just wrong. Buyers are driving the market higher. But I reckon this is a good trap. I reckon the market is going to push, pull back. So this is what I've positioned myself for. Pull back, swing these lows, and look for potentially a little bit of buying interest coming in from this price point. If I can get this move, I'm going to take my standard risk and the profits gained on this trade, and I'm going to use it to size up in this level. Doesn't mean to say the market has to move like this. We've got big interest rate decision coming out later on today on the dollar. So I'm going to be first and foremost looking to manage my risk on this. With regards to GU, I see that, Stephen, you're short on this already. Now, I like to sometimes put these lines across from here and say, hey, do you think we'll sort of, oh, there's my trading view. There we are. Do we think we'll sort of come into this zone? Maybe we'll pull back a bit. Maybe we'll come into this zone or this zone. And I'm looking at these levels thinking maybe the market will reach and pull back. But on GU, it looks like the market has got clear traffic, maybe even up to these highs, like the 128 level again. So we come all the way down and we bounced 127 nicely, and then we started to create this bullish structure. So I'm going to manage my risk quite tight today because of the amount of news that's coming up. But it was said in chat, can you have a quick look at USD CAD? Favor was saying USD CAD. So same kind of story. We get this beautiful run up from buyers. Buyers start running out of steam here and sellers start pushing lower, breaking under this structural low. Now, what I like about this is they consolidated and price was in agreement before it picked a direction, and it ran one last time and the buyers decided we're going to really try and push this higher, and they got pretty much to about this high. They just couldn't get much higher than that. So this is my kind of thoughts on this. We have sellers active in this area here. Sellers are very active here trying to hold price lower. Market pushes lower. It's underneath these significant lows. And I think what we've got is this beautiful head and shoulders formation. We've got this left shoulder. We've got a head potentially forming, and I'd be looking for a right shoulder to form somewhere around about this. So I'd be putting a zone up here, and I'd be looking for the market to come back into this zone, and I'd be looking to try and find myself a selling opportunity within this zone. This is my kind of very simple top-down analysis on USD CAD. Now, if I wanted to get long, and let's say I was already short in this price action, because we can see there was opportunity to get short, if I was already selling this, I would be putting a fib on this low to this high, and I'd be looking to say, okay, where is the 50%? And what it's going to do is it's going to highlight the areas below, which is going to be the 50% down here. I'll remove the fib, and this will show me where the buyers were active in the past. Now, if I'm a seller, do I want to be selling into the buyers? Probably not. So it depends on kind of what my analysis said in terms of take profits. But looking at the 4 hour, we can see this aggressive run up from buyers. Do I really want to be selling into this? No. So there's a good chance the market could come into some of this price action. It'll be quite tricky to formulate an entry on this and then potentially pull back into this price range here. So that's what I'll be looking on USD CAD. If there's anything else you want us to have a look at, chuck it in chat. If not, we're going to probably, I did see, who said they brought the DAX this morning? No, caught along on the DAX at 8 a.m. UK Opens have started with a nice winner. Nice. Where was 8 a.m.? Round about here. So you managed to catch this for like a 50 pip run. I like that. I like that. I think that's pretty good. I think the indexes are very, very different from FX. FX, they like to chop around, wick. They like to sort of not really make any clean structure. When you get indices, they just make these good momentum moves, and then they just kind of go the other way again. So I would definitely want to be a momentum trader. I'd want to be following what price action is doing a lot closer. I think if I was to say, like, and take a typical analysis and go, hey, look at this. We've got this kind of zone up here where the market couldn't push higher. Let me put a zone on this and try and sell from here and use sell limits. I believe 9 times out of 10, the market will typically just continue to run through these price points. I believe, and it's only my opinion, that indices care less about what price did in the past relative to the Forex market. I've done a lot of study on price, and that's kind of the conclusion I've come to. But if you disagree, if you found a way to catch this with limit orders and catch reversals based on price action from the past, tell me about it. Tell me your entry criteria. Let's have a look at it on stream, see if we can figure out, what that might look like as a framework. We're always down for sharing ideas and analysis about how the markets move. This is what we did yesterday. We sold on this beautiful engulfing candle. We started to sell EU, and the market scaled lower, and I scaled in more here, had to sit through a bit of a pullback, And then the market sold all the way down to my final take profit, which was here. We can see we took one order out just a little bit early, but for the majority, it was around about a 30 pip gain. So certainly starting to grow as a trader and allowing my trades to run a little bit higher. This was 15 lots as well, so we managed to get some good movement on this. GU got me good yesterday, actually. So same kind of thing on GU. I was looking for the market to come and sell lower. And if I look at the trade history, the market needed to breathe just a little bit higher, stopped me out on this level, went another 9 pips, and then the market made the move to the downside. So I wasn't able to time the move on GBP USD. Although I was correct about the direction, I wasn't able to time it. And because I'm now using leverage on the account, I need to be able to time the move as well. But quite an interesting day yesterday. But at the moment, we're still seeing EU struggle to break out of this range and still holding around my entry price 0753. I wonder I think we're going to take this high here. What do you reckon? Do you reckon we're going to take this high around about 75 and then we're going to sort of sell off? Or do you think the market's found enough juice to move to the low side from where it is right now?
I don't know. I can see it moving down from where it is now. I'll be honest with you. It's taken a nice sort of significant high. However, it doesn't seem to be slowing down too much just yet. So I could seriously, I reckon you're in a good stead to predict that it will go up to around about the 7.5 level. I think I got it marked out 7.569. That's my level there. I'd like to see it maybe take out that level, then start moving down. I can see that being a valid sort of entry if you were to look at sells on the pullback. But yeah, I definitely see it being valid there. But I'd like to see what the next couple of candles do, because you can see price slowing down. It doesn't want to do much. It's starting to consolidate just a little bit on the 5-minute, and on the 50-minute, we're getting a nice little rejection candle at the bottom here. So I don't. We could see it moving up.
Okay.
I can definitely see it coming up to this area here before. I definitely see that pullback. That makes my rules valid. I'd like to see it either come down to around this area here, or I'd like to see it sort of sweep this low and then continue on up. So I definitely see it pulling back. It's just at what point, and with the price action the way it's going right now, I can definitely see it coming up and sweeping this high before pulling back down.
So my question is, what are you going to do about it? Are you going to just sit on your hands and wait for all this beautiful price action?
You know what? I'm tempted to sit on my hands and wait for that buy up, but if it comes up to this level here, I may just have to put a sell limit on here somewhere, or maybe an instant order or market order around here. We'll see. I'm going to see what price action does, and if it does come up to this level here, then I may end up putting a sell on. But around here, if it's going to move around here, I'm not interested just yet. If it was to allow me to put a sell on, if it was going to say, you know what, Will, I want you to sell this, it's going to have to come up, take this high, then for a pullback, and I'll probably target around here.
Okay. So I want to touch on this because I see some value in this. So Des is saying, I always find some form of price action reacts to fibs, but there's just too many lines for it to be useful. So we can wrap rules around this. We can make this incredibly, incredibly simple. So I'll show you what I'll do. I'll give you an idea. In fact, we'll go ahead and we'll actually execute on this. Let me just pull this line down a little bit so it's out of our view of sight. Now, 1 minute charts create a lot of noise, but we can read them the same as higher time frame charts. So let's say that every time we look at the 1 minute, all we're doing is looking for pullbacks, continuations. When we get a move to the high side and the market starts to fade over, we can look at these price points. Like if this was an hourly chart, we'd say, hey, look at this. We've got 4 bullish candles. Buyers were last active in this price point. We can put a fib from this low to this high, and we can say, okay, now my job is to trade in a 50% retrace, because I want to make sure I'm getting a decent price every time. So my job's to trade in this box. Now, if I look at using the fib as a framework only, just to help me identify where the 50% retrace is, If the market gets under this low, I'm just wrong about my trade idea. Now I've got a box that I can execute my trades in. Now my job would be to look at this box and see how it overlays into this price action here. So for an example, we could say, well, look, this is where the buyers got active. Let me go ahead and buy like right now. And I'm going to put my stop on this low. So we're only risking like $50, right? This is like a 2.5 pip stop loss, but it's a framework that you can use repeatedly with the fib. But what you're trying to do is not use the fib and go, hey, I enter on a 50 or I enter on a 61. You're using the fib to help you identify some kind of price action within the past that you can use to trade from. So that's how I would use a fib consistently. Otherwise, there are too many lines. You can say, well, the 61's the magic number, or the 78's the magic number, maybe the 75, maybe no one's looking at the 70. Maybe I need to use the 89. There's so many ways that we can look at fibs. But if we just use it as a mechanical rule and say, well, actually, from this low to this high, we can all agree the market moved higher. So when it pulls back, I'm always on the right side of the more recent momentum. This is 1 minute chart, so I wouldn't get too crazy excited about it, but we're always on the like the more recent price move. Now, if the market takes this low, I'm just wrong about this move to the upside. But if the market trends and creates these beautiful structures where it pushes up, pulls back, pushes up again, I caught the market in a really favorable price where I was able to manage my risk around it because I got in right around this price action. And imagine this trade or this trends for the next, I don't know, 30 pips. We caught that with a 2 pip stop loss. Now we're risking like $50 on this trade. Imagine what we could do if we said, hey, I'm gonna get this on the 1 minute price action. I'm going to use the fib. I'm going to use the price action. And the fib is an indication of where to look at the price action. Now I'm going to leverage this. I'm going to put $1,000 on a 2 pip stop loss. I mean, you'd be trading 50 lots. I mean, if you didn't catch the stream yesterday, Alex joined us and spoke about a trader that was trading like 100 lots on an account, and the gains were like $21,000. It's 21 pips. So if we could catch the same kind of move on this to the upside and catch 20 pips with $1,000, it's $10,000 gain, and we're not over leveraging or over risking the account. Personally, I would say that I think the stop loss, for me, you're going to get a little bit of commissions, you might get a little bit of slippage, but we can see just by using the fib and using the price action from the left, we've already got a one-to-one trade. Now, I'm not gonna. In fact, I'll close this off just as an example of how we can use fibs as a mechanical rules-based system. But I've done a lot of backtesting around, would I use the 61 to enter? What if I enter on the 50? What if I enter on the 72? Or whatever the case might be. The problem is my stop is always on the place where I'm wrong, which is where I draw the fib from for the start. Well, I know there'll be liquidity under this level. However, what I found is this 71, the 62, the 58, whatever it is, whatever number I'm using, it doesn't tell me anything about the price action from the past. So same kind of thing. I'd put the horse before the carriage. I'd use me personally, I'd use a fib. And I would use that fib as an indication of where do I need to look at price action. And the results will be in your backtest. You can look at that and go, okay, that's actually a tool that can help me. I know I could trade fibs profitably. I know I could, because I'm always going to be buying at discounted prices when they're shown to be momentum. And then we can go ahead and go, hey, well, maybe we're just going to use fair value gaps. We're going to use a fib to highlight the area, and then we're going to use the fair value gap from a 1 minute, a 2 minute, a 5 minute, whatever the case might be, and do some back testing around it. You might find that literally fibs and fair value gaps are a profitable way of trading. For me, fibs and price action is a nice confluence when it comes to the market. And we can see just drive up. This is where buyers were active. Market pulled back. Maybe it moved too quick. Maybe the buyers wanted to get more. They wanted to protect their position, and the market just continues on its merry way. The market doesn't always have to find liquidity. So maybe this is price acceptance, and this is what the market was worth today. So the market pushed up, pulled back, and we got a cheeky little move on the upside. I mean, it's a couple of pips, but the theory remains the same. If you were to do it on the hourly, the 15 minute, the 4 hour, the daily, have a play around with it. You might find that there's a way that you can use these fibs to help you identify price points to trade from in the past. Would I trade this price point? No, I wouldn't. It was only for an example, but I think Alex is definitely interested in catching continuations, and we've seen what he can do when he catches like 10, 20 lot trades with smaller stop losses. Sorry, what were you going to say?
Oh, sorry, yeah, I was just saying, I think it's a fantastic point to sort of touch base on. Like most strategies that you test, if you test them for long enough in the right conditions, most can be profitable. But I think it takes that sort of not ignorance, but that inexperience and that sort of blasé attitude to think, you know what, fibs are going to work. I'm just going to trade fibs. It's going to work. I'm going to do it. I'm going to become profitable. You can't just trade one or two items, in my opinion, anyway, from what I've tested with, because I love my fibs. I think it's a fantastic point of finding where on the charts you can actually look at those zones that you can target and looking from, and it helps me identify where I should be looking at, sort of zoning in on my entries. But it's not something that I think, oh, you know what, fibs are here, boom, I'm going to enter off this and it's going to be 100% profitable. Whereas I think that likewise with fair value gaps are absolutely fantastic, but you can find 10 fair value gaps in one sort of price movement, and you're thinking, oh, hang on a minute, which one's the most valid? But then once you start thinking, okay, hang on a minute, I've put a fib on, fair value gap. Okay, there's 3 fair value gaps in that sort of discount zone, or what I like to call the golden zone, which is between the 6-1 and the 7-1. I'm pretty sure it is. Let me have a quick look. Let me draw my fib. Yeah, so it's the 0.61, the 0.71. So then you're thinking, okay, well, I've narrowed down from 10 to 3. And then you start to home in, you start to zone in where your entry could be. You're like, oh, okay, look, now that I've got 3 fair value gaps, maybe jump down in time. Maybe that's on the 15-minute time frame. You jump down into the 5. Maybe you start just watching price action, like you said, Rich, pointing out that price action and watching how price moves. Maybe it's liquidity. Maybe it's just watching price slow down. Maybe it's watching the candles, the wicks, the rejections. You know, it's homing in and actually watching price on how it reacts from where you've placed your sort of entry criteria to be. That's where you'll start finding your better entry zones. And truth be told, I find it happens on almost any time frame. You can pick an hour time frame, 4 hour, all the way down to the 5 minute, and most times they're not. I'm not going to say it works every time, because it doesn't. Price is, especially on the lower time frame, that is very noisy, but price is pretty much fractal on all time frames, where you can actually look at your strategy and think, you know what, I'm gonna do all this, but I'm going to start on the daily. I'm going to start on the 4 hour, and then you start from there and you do that top down, and you find out that your entry criteria is now on the 15-minute opposed to the 1 minute or the 5 minute, and you've done absolutely nothing different. You've still pointed out your discount zones, your fair value gaps, your price action, your wicks, your rejections, your liquidity zones, and you're finding actually you can have less noise. Okay, yeah, you got to wait. And you've got to be that's where your patience comes in as a trader. But I find that I'm learning more and more, because what I'm trying to do is sort of step away from the 1 minute and the 5 minute time frames and actually start looking at moving up the time frames a little bit, just to allow myself to actually place a trade and walk away for a couple of hours. At the moment, that's not happening. At the moment, I'm jumping in straight away, 1 hour, 15 minute, dropping down, 5 minute, dropping down, entry, 1 minute, boom. Very quick, very choppy, boom, done, profit, taken, walk away. Whereas at the moment, I'm thinking, okay, can I slow this down and have a more relaxed approach to trading, where I just come on, spend 15 minutes, place my limit orders, walk away. And I find that you can definitely do that once you realize what price actually does on multiple time frames. And I think that's what, even now, like, you know, you're always a learner, no matter where you are in your stage of trading. Even I'm now learning that in trading. You know, I'm learning that, oh, okay, hang on a minute. Even though I knew price most of the time acts pretty much similarly, I'm not actually implementing it. And now that I'm actually starting to test that and starting to think, okay, is there a way that I can actually slow my trading down? Okay, yeah, you know what? I may only take 4 trades a week, or maybe even 4 trades a month. But if those 4 trades a month can be absolute winning trades, or maybe a 60-70% win rate winning trades, I'd be pretty happy. I would be pretty happy.
Yeah, I'd be happier if I get 4 trades a day that had a 60% win rate. So that's why I love digging down on the smaller time frames. We've got a comment in chat just saying have a quick look at the Dow. So this isn't something. This is something I used to trade a little while ago, and it's an interesting thing because it's same kind of thing as the DAX. You'll see these moves where the market it will go and then it will just decide, hey, I'm gonna sell off, and then it will just continue selling, and then it will just hit a point where it just says no more. Forex doesn't really do this. We don't get these V-shaped recoveries so much in Forex, and the market just pushes lower and then comes back. Now, what would this look like if we were to look at this? Bearing in mind the market open on this, I think it's in about 5 hours. We've got some USD news coming up in 4 hours. I think it's CPI today, so it's going to be a big one. Now, if I was to look at this and I saw the market going lower, one of my biggest sins on the DAX is I'm trying to catch reversals, and it runs me over quite a lot of the time. Now, what I'm better off doing is saying I'm going to follow this move. And I'm going to follow this move until this move clearly says, hey, I'm not going any further. Now, what would that look like? If we looked at the hourly chart yesterday, we see we've got this big selling move, and then we get this attempt to buy, and the market oscillates, then just sells off aggressively. And by the time it tells me, hey, let's buy in here, the market is already retraced, like 250 points, I believe this is. So I'm sitting there going, where's my entry? Like, unless I'm sitting there trying to catch the bottom on this, going, oh, look at this has dropped fairly. And that doesn't work very well. Well, not for me anyway. Not with the way I trade. So I'm looking at this on the hourly and I'm saying, there's no possible way I could find an entry. Okay, let's jump down to the 15-minute. Same kind of move. So the market is just completely sold off. And then we get this big wick and the market closes almost as a bullish pin bar. Can't quite do it. Now, if I'm to enter this right here, I'm going to have 100-point stop loss. That's mega, like 100-point stop loss. That's pretty big. So how do we catch this bullish move? Like, what would we have to wait for? Well, a structure break for me on the 1 hour is going to be up here. By the time we've broken structure, we've already, market's already gone and moved 200 points, 300 points. So how do we participate in this? We don't want to blindly catch it as it's falling unless you find a way for that to work. But I don't. We wait for an entry criteria. Let's jump down even smaller. We're now going to go to the 5-minute. And we're watching this huge selling pressure. So market sells off, shows signs that buyers want to come in. We've got no 5-minute structure break. And the market completely fades that move out. I mean, this next candle that prints here tells me that there is no interest in buyers, or if there is, it's overwhelmed by sellers. And what does the market do? Continue lower. And then we get the same again, another bullish candle. Well, hasn't broken any 5-minute structure until up here. So we're looking at this and we're saying, how can I formulate a trade idea that's going to get me in this trade and make all the profit? Well, I can't find an entry on the hour. I can't find an entry on the 15. I can't find an entry on the 5. And now we're forced to go down to the 1-minute, which is even worse because the 1-minute has so much chop and noise in it. So let's have a look at the 1-minute. And what does this look like? Market comes down, sells aggressively. We get an attempt to buyers. We get this beautiful engulfing candle. Maybe we get triggered into this trade here. Market just gets overwhelmed by sellers. That's that 5-minute close. Market tries to buy up again. We probably got baited again on this second candle close. And then the market just sells lower. And then finally just starts dribbling up to the high side. I could see easily 2 losses in this trying to catch the reversal on it. And by the time the market actually reverses, my confidence is going to be on the floor. I'm going to be down 2R for the day. And I'm just going to be sitting there from a point of FOMO saying, I'm just trying to catch the bottom of the market. So the market's moving these beautiful ways, but trying to catch these moves, so many times I find there aren't entries. And if we wait for high time frame structure breaks and structure shifts and fair value gaps and all that kind of stuff, most of the time we're left out in the cold just watching the market move against us with no entry. So I know RS, you said, what's your thoughts on the Dow? That's my thoughts on the Dow. I've not really reliably been able to find a framework to say, hey, I want to get in these moves and I want to get out as the market starts to show signs it goes in reverse. So that's kind of my thoughts on it. I'm not a Dow trader. I haven't had too much success more recently if I was to trade it, and it just doesn't align to my price action. But when we start looking at the OFX market, this stuff just wobbles around and creates like nice zones and structure points and supply points. But yeah, the Dow is a bit of a crazy horse that I think just runs its own race sometimes, and I don't understand it. Will, have you ever traded an index? Can you shed some light on it?
Not I like the NAS 100, the NAS 100, which I was actually looking at today. I've actually put a limit order on this. I was going to let you finish before, but worst thing is I missed my entry. This would have been my nice little entry. If I bring my chart up now, I'll show you and you'll have a quick look. So I don't really trade much other than FX markets. However, I do like the NAS 100, or the US 100, depending on what sort of terminology you're using. I do like this chart, and I do like the way this plays out. My win rate on this so far has been absolutely phenomenal. It's only in testing period for me. It's not something that I've got the confidence just yet. I mean, just yet, I'm starting to look at thinking, you know what? I quite like the way this is moving. But this is more of a re-entry on a re-entry or on an entry. So I should have jumped in on this, or probably, in fact, what time would I have had an entry? 9:10. So obviously we were doing the intro to the live stream, yada yada yada. Didn't have quite time to jump on the chart here and get my entry. However, I have placed a sort of re-entry on where my entry would be. Now, this is a 1-to-1. I'm not too keen on a 1-to-1, but stops are at the high, and then I'm targeting this sort of liquidity point down here. I could target further, maybe down here, if not possibly down around here somewhere. Whether it'll get as far down as this sort of area down here, I'm not too sure. We'll have to see. But that's going to be some longer term holding. That's for a 3.6R. So I'm going to chase this area. And then what I'll do is close out at this area, and then I'll sort of just see how price moves down. Now, in fact, it's actually moving up to my entry while I'm talking about it. So that's for a 1-to-1. That's the only non-Forex pair that I trade. I don't trade anything else. I don't trade sort of Dow Jones, S&P.
Okay.
I have looked at the S&P 500, however. I have looked at that. I did.
Wait, what's your money maker? What's your biggest money maker?
EU all day long.
EU. Okay.
EU is the money. EU is the money maker. Sometimes GU will have its months. Yeah, they sort of they swap over with each other. So like 1 month will be EU will be the money maker, and like GU will be trying to chase it, and then other times it'll be GU, and then like EU's trying to chase it. But that's where I put all my heart and my attention, my love and care into the pairs. So, you know what, I got a great relationship. It's more of like a 3-way relationship, which is absolutely fantastic. So if I'm arguing with the EU, I go straight to GU.
Okay.
But yeah, they're my money makers.
Tell us in chat, what's your biggest money maker? I want to see if we're sort of more FX traders, if we're index traders, if we're commodity traders. Will, I want to ask you, if I could show you something on, let's say not the Germany 40, not the Dow. All right, the NAS 100. If I could show you something on the NAS 100 that literally blew the socks off EU as your moneymaker, would you switch? Would you change the way you...
I don't know. I mean, if you showed me something that was so textbook, it clearly works, it's fantastic, I'd have to test it myself, of course. Okay. But I don't know. I've developed a real good relationship with the EU. I feel like I'd be cheating on it.
But so hang on, you would stay with a currency pair or a trading asset that's just not rewarding you because of like a bias from the past? If you had an opportunity
if it's not
to make
rewarding,
money,
yeah.
Well, no. Let's say it's making you 2% a month, but I showed you something that could make you 4% a month. Oof. What do you do?
I'd have to test it. I'd say I wouldn't be ignorant and say no, I'm not interested. EU, GU, 100% all the way. But if you showed me some random pair like the Germany the Germany 30 or maybe the US 30 or the NAS 100, and you said, you know what, this is going to make you 4% a month, almost guaranteed. If you do it correctly and you do it consistently, it's fantastic. I'd say to you, okay, I'll hear you out. I'd look at it and then I'd test it. I'd back test it. I'd forward test it. I'd take out on dates. I'd wine and dine it before getting into bed with it, you know? And then once I'd known for a fact that she's going to treat you nicely and she's going to give you that 4% a month, then, you know, I'd go, is it worth jumping ship? You know, I do that sort of self-risk and self-assessment on whether it's a long-term relationship or whether it's just going to be a quick part-time fling. That's how I look at jumping ship. Very much a relationship.
Because we can always find something on social media that's like this makes 20% a month. I just flipped my account with this.
Yeah.
We just done all this stuff, and it's that tricky moment of, do you stick with your bias of what you understand, or do you make that pivot into something that's a little bit more risky or a little bit more unknown, should I say? So we've got a Noel saying I trade DAX, so that's an index trader. Munit is saying I'm a commodity trader. I trade gold. Stephen's trading all the FX pairs, I was going to say all the majors, but you got AUD CAD in there as well. Frank just caught a move on gold as well. So let's get a poll up in here. Let's see if we're more FX traders, commodity traders, or index traders. And to answer your question earlier, so we've taken this high on the 1 minute. And same again, we've put the fib from the low to the high, and I've marked this box up, which is the 50% retrace. Now, I would hold this trade until the low was broken, and it shows me that momentum has now shifted to the downside. If I look at this move up here and the market starts coming lower, I've already got enough information to say, oh, hold on, market's now moving lower. So if the market did move lower, I would then be saying, okay, I'm now going to draw my fib from this high to the low, and as price starts to retrace back up, I'd then be using this high to see if I could sell from it. So just a nice simple technique to follow what the market's doing right now. And then all I'd do is just look in this price point and say, can I buy in this for an expected pullback and a continuation? Now, if you go and study the price action, you'll find very often the market doesn't go up, pull back, go up, pull back, go up again, pull back. You'll find very often the market is just interested in going up, coming down, all the way down, then up again, then down a bit more, then up a bit more. Sometimes it goes left and right, and it can go wherever it wants. And FX pairs are incredibly difficult to forecast where the market's going because it doesn't create this beautiful, clean structure on a daily basis. Now, if you went to the 5 minute or the 15 or the hourly, would this look different? Well, that's the question for you to figure out through some back testing. But on the 1 minute chart, we can see this low got respected. This low is getting respected. Is it going to take this high? For it to take this high, we need more buyers still willing to push price higher. And then you've got to ask yourself, at what point are buyers going to become exhausted? And the moment they become exhausted is when we start pushing under this low. Now, if you want to get super aggressive with this, you could say this is the low that the market had to take out. And now you could say, look, we've already got a shift in sentiment. The market's now pushing lower. And actually, there's a good chance that the higher the day's in, this could be the high right here. If we thought that was the case, we put our fib from the low to the high and we mark up. No, we don't. That's upside down. Well done, Rich. We go from the high to the low and we mark up the 50% retrace. And on this trade, it would look like this. And if you took a stop loss, you'd say, no problem. Market's just gone higher again. It just faked me out. And that's what I find the Forex market does a lot of. It fakes people out. It's always running one way and then it runs the other way. And it's constantly just trying to feel really good, efficient business and orders. And I think the most efficient business isn't typically through very clean trending markets, because if it was, we'd all make money every day. And 80% of traders don't make money. So you've got to start thinking outside the box. What can I do differently to 80% of traders? There was a YouTube short that I watched yesterday. And this trader, she was talking about how she was taught by her uncle, and she does things very, very differently. And her uncle taught her to do things the dead opposite to what traders do and what they're taught online. And I would, if you said to me, hey, Rich, you've got to trade a system, I would rather challenge that approach and say, I want to do what everyone else isn't doing. I want to take the unorthodox approach, because if I find a way that I can participate in the market from a very unorthodox approach, then there's, well, less eyes are on it. And I think there's more chance that that everyone is looking at kind of highs and lows and how do I participate in this, and the market knows it. And then yeah, I don't want to go off on a rant. How are we doing for the oh, let's have a look. 83% are trading the forex market.
I got curiosity just based on, like you said, what are the money makers,
Amazing.
forex, commodities, indices. I've got a bit of curiosity out there. When you asked me, is there anything else I trade other than FX pairs? Is there any sort of pairs the chat trade that are just sort of, you get those weird pairs that you'd never think anyone trades? Are there any sort of special, unique pairs that you think, you know what, I'm unique for trading? Because I know some traders, they like to be real different. Like us traders, we like to be as different as we can. Let's be honest here. I know I do. And every trader that I've met likes to have their own sort of unique either outlook on the market. They like to have their own unique sort of technical analysis. That everyone's looking for their sort of uniqueness in the market. Is there any sort of pairs you guys think, you know what? No one trades this. I'm unique for trading this. I'd be really interested to see in chat, because as far as trading pairs, I'm as boring as they come. Okay, maybe my unique pair may be EG, Euro GBP. That's slightly unique, I guess. Not many people trade that I've met, but I mean that's pretty basic still. So I just for curiosity in chat, is there any of you guys actually trade like some real different or sort of odd pairs that you trade?
Yeah, Stephen's already got it. So at the moment, Stephen's the one with the most authentic pair, AUD CAD. I don't know another trader that trades AUD CAD. Maybe
Yeah,
maybe
no, that's a good one. I like that. I've not done AUD CAD. AUD
Yeah.
USD I like. That's quite an okay one to watch.
Yeah. Russell's saying if EU is weak and GU is strong, then shorting EG. Now, I tried this. I think it was yesterday or the day before. I never get any traction with this. Every time I look at the EU and saying like, hey, look at EU right now. We got this beautiful 1 minute. We've come up, we've pushed, we broke this low. Hey, we're completely bearish. And the market is going bearish. But GU was going long. And and at those moments where I've said, "Hey, I think this happens on EG," just doesn't play through. It doesn't work for me. It doesn't work in my head. Um, Paul, don't even go there. So yeah, it doesn't even work in my head. So now we've got to ask ourselves, right? 15-minute. Let's get serious here. So we're in a trade. We're up $100. We sold EU from 0752, and the market is now pulling back. Okay, makes sense. High time frame, right? I'm trading from a high time frame price point. Market is pulling back. Now, I've got to ask myself, we've taken liquidity from this high, and the market is showing that it wants to pull back. Now, if I put a fib from the low to the high, I'm running into the 50% retrace. So we're going to go ahead and put a box on this. And I know, Des, you said if the market is always wicking people out, why don't you try and trade that? What would that look like? How would you trade it? How would you formulate an entry around that? And surely when the market didn't wick people out, you'd be sitting on your hands all day, not getting much traction. So we'll look at the 5 minute to get a little bit more information about this. So this is our 50% retrace, this box. So our stops would have to be on this low. Market's pushed up. We've got nice aggressive move through here and here. And I think, I just think higher time frame context. I just think, sure, the market could bounce in this price point and go up. I could close this trade now and go, thank you for the $120. I could. But I think if I keep doing that, I'm not going to make those trades where the market goes down, takes these lows, and I get like $300-$400. I'm still going to target these lows, and I think this zone fails. Now, if you were a Fibonacci trader and you were trading for price action, your job would be to try and find a fair value gap in here. If we drop down to the fifth, if you're looking at a 15-minute fib, then you probably want to look at 15-minute fair value gaps. If you're looking at 5 minute fibs, you probably want 5 minute fair value gaps. And right now on this, I've got no fair value gap in this candle, none in this candle. I don't really understand much in this candle. Probably the biggest argument I could make for it would be that right there. Let's go ahead and get rid of this box. Would be putting this fair value gap between this candle here and this candle here. Maybe if I wanted to get long, maybe I could go in with this with a 10 pip stop loss, and this would be my entry. Maybe. I'm just not buying it. I mean, I'll leave it on. I'll leave it on and we'll have a look and see if the market can push from it. But I'm not convinced. Nah, not convinced.
Come down now. Just sort of thinking, is it coming down to some form of point where I can look at an entry? I think so. I think it's coming down to a nice sort of area where I can start considering an entry, but I'd like to see it come down a little bit lower yet. I'd like to see.
So you want to buy? You want to buy?
I want to buy. I do want to buy. Yeah.
Give me a price point. Where would you buy it from? Like ahead of time. None of this. Oh, I'm thinking ahead of time. Where is Will going to?
Let's have a look.
Because
you're 1.07421.
421. Okay.
Would be a point that I'd look at buying from.
Stops on the low, 7 pips.
Oh yeah, stops on the low all day long. Or no. I'd probably go stops just below the low because there is a massive chance that they are going to run the lows before going up higher. But that would be my sort of. I like to have my high risk and my low risk entries. So that would be my high risk entry. My low risk entry would be waiting for. Let's have a look. 7.348. I'd want to see that low run, and then I'd look at some nice buys there. That would be my sort of low to medium risk entry criteria. That would be.
Okay. So what are you thinking now? If the market goes and you're not going to get filled, you're going to put in an early entry. You're going to just average into this. You're going to be patient and sit there with a limit.
I'm going to be patient, sit on my hands. I'm not going to get an early entry just yet because no, I'm not going to because I see it going lower. It's at a nice point now. It's at a nice imbalance on the 5 minute. It's filled that fair value gap, and it is rejecting. Let me just chuck a fib on. Let's have a look. Yeah, it's not at the point where I'd want it to be just yet. So I want it to come down to this sort of area here. I want to be seeing this. Well,
the moment you're filled on that trade, I want to know about it because you're going to be hedging my shorts, and I mean, what do you want to? Do you want to just give me your bank details so that you can send the money directly over when it hits your stop? How do you want to do it?
I'll take your stops. Don't worry.
No chance. Well, not no chance. We're trading the probability game. We found a little bit of volume on this level. I really think that the market is out to be a bit of a meanie today, and I think it's going to start taking highs. I think it's going to start taking lows. I think we're going to start oscillating, and really get traders, confused. Are we going up? Are we going down? Are we going round and round? And I think
price is looking lovely for buys. I think it is looking lovely for buys. But having said that, like you said earlier, Rich, I can see it running these lows. I really can. So I can see both points. I would have liked to have had a sell once it got to this area here. Price was acting beautifully on the 5 minute here. Like you can see, we started consolidating, slowing down a little bit. Had a couple of rejections, but it was just nothing special for me just yet. I would have liked to have seen this high get taken, and then I would have entered into a sell position. But I didn't like that early sell. Didn't like the early sell.
Okay. Well, it's getting close now. I'm up $150. I think by the time you get filled, I'll be up about $200. 156. You better get ready. This looks like it's getting close to your entry. It's got to push through.
It is. It's coming down. It is coming down.
Okay. It's got to push through this 15-minute fair value gap. In fact, well, let me know when you get filled on your entry. Let me know the moment you get filled on your entry, because
if it's off stream, I'll even send you a message straight away.
Okay.
even if it's a minute.
I reckon you're filled now, yeah?
I will be, yeah. I'm not filled just yet.
Okay. All right. Well, we're reacting to this 15-minute fair value gap. We've got it round about 0744. And is this a thing? Is this a real thing? Do you think that you can put fibs on, find the 50% retrace, mark up the fair value gaps? Can you put an entry on it with a 2 pip stop loss? Is that a real thing? Backtesting will tell you. It always comes back to that same thing. Don't take a trader's word for it. Use that as like an interesting theme. Then go back and go, you know what? This is so super easy and mechanical, a little bit time consuming, but I'm going to go and mark up highs and lows, look for the retraces, and I'm going to try and find the fair value gaps within them. Now, once you do that, you'll have the answers for yourself. And you won't need Will or myself to say, this works. Like, I know there's things in the market that play out at a probability, but I also know that there are things that I have no idea about. So if we can create a little creative space where traders can, challenge their thought process and share some ideas, no one's going to do the work for you. You've got to go off and spend a little bit of time on the charts and try and figure this stuff out. And the difference of knowing it and not knowing it could be hundreds of thousands of dollars, because you would take on a challenge account, you would pass it, you would scale it, you would get funded, you'd get all the good stuff that comes from it, and next thing you know, you're in a different league. And so if you're seriously interested in putting a little bit of time into trading, the upside can be so rewarding. I got a conviction on this. I'm going to sell this again. I think I'm going to double down on this position. I'll pop my stop up here for now. Probably not looking to take a full stop on this. Let me pull my stops down a little bit. So we've got 2 orders, and I'm really going to be looking for the market to push through this price action. I think the market's I think the market's out today. I don't think it knows where it wants to go, because we've got the USD interest rates. So sort of taking this high, taking this low, it's another way of saying we're just sitting in a range. And I'm participating within the price action in a way that I think that we're going to stay within a range. But you know what? I'll just come back to this poll. This is music to my ears. 83% of our audience trade Forex. Only 4% trade commodities, and 13% make their money from indices as well. So that's music to my ears, Forex traders. So we'll get to see a little bit more of the FX charts as well.
Also, Rich, before we do put an end to anything here, I just want to say, what are you trading the news later on for the CBA? You're not? You're staying out?
Yeah, I'm going to be out of the market before that. I'll have a sneaky play afterwards. But if we look, where do we have? So we had interest. No, we had news come out around about 9 a.m. Let's find. There we are. This is a news move. This is not the best news move. So am I trading particularly this? No. What I'm waiting for is this first candle to drive down, and then I'm saying, okay, what does this tell me about price? And I'm interested in trading once the news comes out, not before. If you might as well flip a coin and say heads or tails. I want to wait and then go, oh, that was tails. Let me use that information to try and help me forecast what I think happens thereafter. So yeah, I'll be trading the news, but not on the release. I'll probably be trading the aftermath of the news at the moment. But at the moment, we've only got 2 orders running on EU. We've got 4 lots. We're up about $100 on it, and I'm anticipating that this low is going to be taken. The reason I sized up on this is not just because I think it's going to come down and clip you into the trade wheel, and I hope it does. I think it's going to just sit in a range. And if that range is a little bit bigger than just this immediate range, which is tiny, it's like 12 pips. If the range is literally just wicking highs and lows and poking fun at the market, then I think there's a good chance that this low could still potentially hold price, because how many people are going to be willing to sell the market and push through this low ahead of news and hold those positions as well? So I'm definitely going to be sizing up very, very aggressively in this price point, providing the market can push down to it ahead of news. Once the news comes out, it's anyone's game.
Yeah, it's just a matter of just flip a coin, and then let me know.
Yeah.
I tell you what.
Sorry, go on.
Tell you what, that would have been really interesting. Yeah, we should put a poll out, and if there was really high, we should actually do like a news stream. Put a poll out, and then what they do, guess long or short, and we just got a full margin, full margin and an account based on what chat is telling us, long or short.
Okay.
On that
Okay, don't tempt me. Don't tempt me.
That'd be
I mean,
interesting. That would.
so just
Then we'll
looking
just
at
play chat if we lose.
yeah, we can. That'd be nice. Just looking at Munich saying brokers give free education, but most traders lose. Is this education made for you to fail? If so, where do you get the right info? Will, I'd love to hear your thoughts on that.
Where do you get the right info for
Yeah,
education?
do you think that brokers put information out for traders to lose, just for traders to click buy and sell because they feel a little bit more informed?
That's a really interesting outlook. You know, I've never actually thought of that sort of outlook. I, I mean, I feel like what brokers like to do is put information out there, but keep it basic. But having said that, I've not really read sort of the education side of what brokers put out there. I think they like to just keep it real basic and just give you enough confidence and give you enough sort of information to get you hooked and to get you thinking, you know what you're talking about, just to get you to buy and sell. I think it's definitely a funnel to make you buy and sell. Is it enough to make you profitable? I don't think any education is. I think the only thing that'll make you profitable is your own back testing. You know, education will give you the sort of structure and the frame that you need to become profitable. It'll give you the information you need to put into place. But I don't think education will make you profitable. I think it's just you. So I don't know. So I sort of see where you're coming from, but I don't know. I think brokers just want you to read the information, have the information, then just go and run away with it. I don't think they'll tell you the sort of the risk management you need to have alongside it. I don't think they'll tell you the psychology you need to have. It won't be like having a mentor, for example. It won't be like having someone who genuinely wants you to succeed. It'll just be someone who says, you know what, there you go, there's some information, go do your will with it and go click buy or sell.
Yeah. Yeah, because probably like what Graham says, brokers want you to do well if they're making money off commissions. So they just want you to do well. They want you in that cycle to just keep clicking buy and sell because maybe that's where they make their commissions from. Now, a little bit of information can be a dangerous thing because like I know about Fibonacci's now. Okay. But like Jordan says, all the information to become a professional footballer is there. Does everyone achieve it? No.
Yeah,
So
absolutely. You know, exactly.
What's the difference between a professional football player and someone who's a fan who knows all the theory? Well, the difference would be that professional had a coach, spent time, practiced their craft. What you see is the tip of the iceberg. You see the 1% that is put out in the public eye. What you don't see is the 99% of backtesting and practice that trader did and that footballer did. The training drills, the early mornings, the nutrition, the sports coaches. And yeah, like we see this trade here on the screen. We can see that EU has come down to this fair value gap and printed beautifully. We called this ahead of time. This could have been a 1 pip stop loss, would now be up 6R on this trade. Now, is it a real thing? So that's the theory. That's just like, hey, the brokers say, fair value gaps are a real thing. Go and trade them. No. Fair value gaps hold mechanical rules that you can go and get information about and find out if they're profitable. That's like doing the drill to become the professional footballer. And like you say, do the brokers actually give us their psychology, the risk management, the accountability? No. They just want you to come in and just click buy and sell. And when every time you click buy and sell, it's commissions for them. It's a free opportunity for the market to continue to just move and they make money from it. So I think the informed trader, not the misinformed trader, so the informed trader. So to answer your question, where would you go and get information? You would use your experience of listening to ideas that traders share, and then you go, what does that information mean to me? Can I go and apply that information in a way that has proven in the past it has a positive expectancy, it can make me money? Then with that information, can I then use that moving forward, manage my risk, keep myself accountable, hold my my psychology to a good level, and can I execute on my trades and get profit just like it showed in the past? That you have to kind of do that work yourself. Unfortunately, there's no quick way to it. This trader that was sharing, like, I think how she become profitable, she said, like, typically you want 2 to 3 years, and there's no quick way of getting to that point apart from just watching price and learning about price, not just randomly clicking buy and sell, having a thesis, having a theory, having a narrative, then clicking sell and recording what happened next, looking at what happened next. Look at these candles here. We have this beautiful buying interest here. The market can't go higher. I called it on a sell at 0752. The market pulled back right to the base of where the buyers were active, and the market decided to buy up again. This is information. Look at this 15-minute candle. Completely pushes up, and it looks like it's going to break and close above this. What does that tell me about price? Tells me there is a lot of buyers in this price point, and it's confirmed by the market pushing up higher. Now imagine I went and looked at 5 examples of these a day. Now imagine I looked at 50 a week, because apparently there's a 10-day week. Now I looked at 200 a month. Now give that a couple of years. And I've looked at this example thousands of times, and I've ingrained that in my mind. Hey, when I see this, there's a higher probability of something happening over another. There's no quick way to that path. There isn't, like, apart from signals, apart from literally going, hey, someone else has gone and put in that work. I'm just going to take their signals because apparently they know what they're talking about. There's no quick way to it. And one day that trader is going to stop putting out signals, and then you're stuck in the middle of a lake with no oar, and you can't get anywhere. You can't get forward. You can't get back. You're just splashing water over yourself. So you got to put in the work.
It's like, for example, I could bring any one of my mates right now. I could go down, grab one of my mates, bring him into my office, and tell him exactly how I trade, show him where to buy, where to sell, when I trade, when I buy, when I sell. He copies everything. He watches me. He does everything that I do. He's profitable. He's making money. He's loving it. He's thinking, yeah, this is good. He's writing it all down, and then he goes away. He's written it all down. He's written how I see the markets, how I trade the markets, how I draw out my fibs, my imbalances, my fair value gaps, my liquidity points, my price structure, everything. He's really gone into depth, spent a month with me, and learned exactly how I trade. He started making money with me, for example, but he'll go home and I can guarantee you he'll lose money because you still need to go through that. Because even if he's got it all written down and he knows how I trade, he will not see how I see the market. So, for example, if there's like, okay, it ticks my boxes, but I don't like the price action, you know, and sometimes it happens, you know, I'll look at it and it'll be like, you know, this is fantastic. It ticks box A, B, C, D right through till Z, but I just don't like the way price action moves, and I don't like the way price action is moving at all. And then I stay out because I didn't like the way that the order flow and the price was reacting to certain points. While my mate has bought or he's sold, he's entered the trade because all those boxes have been ticked. I've stayed out. He's lost money because he doesn't have that experience where he can look at the order flow of the market and think, no, actually, I don't like this. And that's what the experience gives you. You can have everybody feed it to you on a plate. You can go to Warren Buffett and he can spoon feed you the market on a plate. But unless you've got that experience in the market yourself, and unless you're going to jump in the deep end and learn to swim on your own back, you will end up losing money. You just can't copy people and hope that it will work, but it won't work long term.
Will, have you heard the phrase grandfather strength?
Grandfather strength?
Yeah.
No, I've not heard that.
Okay, it's where you see these young whippersnappers trying to lift weights, move something around the farmyard. They're trying to roll over an old tractor tire, and the granddad just comes out and he's been doing it his whole life, and he has the technique, the experience, and the strength. And it's where people go, that's that grandfather strength. It's years and years of compounding the same skill.
Yeah, absolutely. You know, it's knowledge that you have without realizing you have it. You know, like I could jump on a chart and almost straight away see price point and my price range. And I can do that now without even thinking about it. I don't need to draw out highs and lows. I draw out highs and lows so I can forget about it. And so they're there visually in front of me. I don't need them because I've spent so long watching my highs and lows, watching my range, watching order flow, watching price. I can just come in and think, okay, I spend 5-10 minutes at the market before sort of understanding whether I'm seeing something, not seeing something, could see something, or want to see something. You know, I sort of know relatively quickly. Give 2-3 years ago, I'd be looking at the market and spending an hour and a half before I'm seeing it, and then I've missed the movement. You know, I've missed the price. And like you said, it's like that. It's that grandfather show. We call it farmer strength, like Mong strong.
Okay.
You know, so you see these farmers. You know, they're you see boys in the gym, they're lifting weights and they're working hard. Next minute, they cannot live with the boys on the farm, and you have that farm strong then. So I guess that would be my equivalent.
It's
of
probably a similar theory. I want to pivot. I
Yeah.
want to touch on this. So Munich says, I heard brokers make money from money in accounts, as that can be used lending and investing. Commissions is pocket money to them. Okay. Now think about this in the same context as trading. Commissions are pocket money. Okay, I place 3 trades a day. There's another 100 of my friends placing 3 trades a day. Their 100 friends are placing 3 trades a day. Next thing you know, that broker has hundreds of thousands of clients placing dozens of trades a day, typically, because retail traders typically overtrade, right? So what starts off as pocket money becomes hundreds and hundreds and hundreds of paper rounds. Next thing you know, it's not pocket money anymore. And it's the same thing with trading. If you just take a small actionable step every day and compound that over time, it becomes exponential growth. And it's not happened overnight. Graham, I know what you're saying about footballers have a lot of natural talent and physical ability. And I do think there are certain traders or certain people and professions that come into trading that have a natural gifted ability or have life experience that lends itself quite well to trading. What would be an example of that? I've heard engineers typically aren't great traders because they're looking for very logical solutions to problems, and the market can be very illogical. I watched a documentary where a trader actually says, I just can't do this. And they said, well, why? And he said, because every day I turn up, I apply myself, I put my best foot forward, and I don't get a good result. And some days I do and some days I don't. And I can't deal with that because I'm used to putting in X and getting out Y. And the market, you can do all the right things, and some days it just gives you a bad result, but you did all your things correct. So there's some mindset stuff and some professions that I think really help traders to actually become naturally good. I did 14 years as a car mechanic before I got into trading. That didn't help me. Like, it didn't give me the skills and the mindset. Sure, I run my own business and I knew about money management and stuff like that, but it didn't give me the right mindset to look at technicals and watch this stuff at the bottom of the chart. So there are very deliberate practices you can do to expose yourself to this kind of thing. One thing I've got written down, well, I don't know if you'd have heard of this before. It's a custom exercise that I've created for myself. It's called the coin flip exercise. And the idea is I'm going to flip a coin 100 times and do this daily, and I'm going to give myself the ability to be exposed to a bias before I flip it and say, this coin is going to come up heads. I know this is going to come up heads. This is guaranteed to be a heads. And I'm going to flip that coin, and I'm going to give myself the ability to be disappointed again and again and again. And what I'm doing is I'm learning to expose myself to a probability-based outcome. And I'm learning to manage my expectations based on the result of that coin flip, which I have no control over. You do that 100 times a day, you desensitize yourself to the result, and you learn to fall in love with the process. Hey, this is my speculation. I believe a heads comes out next. My job is just to flip it and write it down. Bing. Next thing you know, tails comes out. Oh, well, I followed my process. I called what I thought would happen ahead of time. I put 1 unit of risk on. I flipped the coin and it come up tails. I wrote the result down. I've done a great job today. Let's turn up tomorrow and do the same again. You can expose yourself to that dozens of times a day. You don't have to wait for trades to hit your stop loss. So there's certainly mental exercises you can do that are really going to compound that growth quicker. We don't have to all be 80 years old to get that grandfather strength. There are deliberate practices and techniques and training exercises that we can do that will help with the mindset, that will speed up the ability to read the markets, that will help with risk management and will help with accountability, but you've got to want it. And if you're lazy in your diet, you're probably lazy in other areas of your life. If you're lazy in the gym, you're probably lazy in other areas of your life. A really good trader once said to me, you cannot spot train your psychology. It's a byproduct of everything else in your life. And so if your trading sucks right now, there's a good chance that there are things in your life that are not quite where you want them to be. And is it the fact that your trading is going bad that's affecting the other things, or is your trading going bad because of the other things in your life? These are the things that you've got to sit there and work at. But it's not just think about. Sure, you've got to identify it, but you've got to work at it. You've got to go off. You've got to spend time and go and say, hey, how can I fix this at the root? If you don't fix it at the root, the weeds will still keep coming up. And that's a you issue. If you keep trimming the weeds, they'll still keep coming up. You've got to find out at the root, how can I be a better trader? Why do I close my trades early? Why am I fearful? Why am I greedy? Why am I not consistent? Does that come from life in general? Or is it actually that I'm just not consistent in trading because I'm trying to make loads of money real quick? I was up 7% yesterday on an account. All I had to do was trade my analysis. That's it. All I had to do was trade my analysis. And I wandered off plan. And let's just say I didn't achieve my target by a long way because I wandered off plan. Now, why did I wander off plan? I don't care that I wandered off plan. I care why I wandered off plan. I don't care that weeds are coming up. I care why the weeds are coming up. My job is to go and find it, fix it, kill it at its root. As soon as I can do that, I will be a better trader through every area of my life. But not just trading. Trading's the byproduct. I'll be better in life in general. I'll be a better friend, a better husband, a better, accountability partner. I'll be a better business owner, a better trader, a better money manager, a better risk manager. My analysis will be better. So it's all about life balance. So a huge part of my day goes into how can I formulate and construct the best version of life balance that supports me to achieve my goals. It's a little bit of a rant, but I mean, this is what I love about trading. It brings to my forefront, hey, there's problems very obviously within what I'm doing on a daily basis. How can I fix it? There's not many other jobs, unless they're at an absolute world-class professional level, that make you go and address the you. I've worked all sorts of jobs. I've worked in a warehouse, been a mechanic. I've been an egg grader where my job was to run into these big sheds full of chickens and pick up the eggs and then go and grade them based on their size. I've done probably 15 different jobs throughout my life, and not one single job has made me stop and reflect inwardly and say, hey, what can I do a little bit better? Trading immediately gave me that opportunity. And it's unique. It's not like anything else I've ever experienced. And therefore, my life experience wasn't conditioned to help me be a great trader from day one.
Yeah, I'm going to build on that as well, Rich. Like you said, you hit the nail on the head. How many jobs have you had previously to trade in, and how many of them actually allowed you to sort of reflect in on your
None.
life, like internally, like you as a person, your psychology, and where you're going, who you are, and like actually take an inward look on yourself. Like you said, none of them. And then people are expecting to come to trading and just get it like that and become a great trader, and it doesn't happen. It really does not happen where you just think, you know what, I'm gonna jump into trading and just boom, I'm good. It doesn't happen. It takes that process. Now, if, however, you're one of those people who are very in touch with yourself and you're very much able to look in on yourself and master your psychology, you probably will be able to learn that psychological part of trading a lot quicker than someone who doesn't, because you've already got that sort of acknowledgement of that trading mindset. You've got that acknowledgement where you can hold yourself accountable and you're thinking, you know what, I need to look at how me as a person and what I'm doing in my daily life is affecting my trading. You don't go into, like, I've known loads of people when I've worked in other jobs, like where I was a waiter for a certain period of time. My partner now, she works in a cafe. I know for a fact that she's like the manager there. People come into work and they've had a bad day, and this is before they get into work, and you can instantly tell their game is off. They're not as polite. Obviously, you still got to be customer service, but they're not as polite. They're not great to work around. They're miserable. And then you can bring that into trading. That's impacting their life, in their work life, sorry. That's affecting their work life, and their psychology in their work life doesn't actually affect how they work. Now you imagine that you brought that into your trading work. Say you've left that job now, you still have a bad day, you move to trading. You bring that sort of capacity of sulkiness, as I like to call it. You sulk in trading, you have that bad day in trading where the markets actually require you to be good with psychology and actually put that sort of bad day behind you. You'll find that you will take those losses. You'll actually have that negative day, and it will really, really impact you. But because you worked in a cafe before, because you worked in a restaurant before, or you were collecting eggs before, it's not affected you. You thought, oh, what a bad day. Okay, who cares? I'm gonna go down the pub and drink my sorrows away, or I'm gonna go down and order a Chinese or get a bottle of wine, etc. You have ways where you sulk about it and you move on. But in trading, you've actually got to think, oh, I've had a really bad day here. Why? And you've got to actually self-reflect and look at yourself. And a lot of people come into trading not realizing the impact that actually has on your trading journey. It's like you said, it's such an amazing job where it'll actually force you to look in on yourself and your habits during the day. And like you said, if you're lazy in the gym, there's a good chance you're lazy on the charts. If you're lazy in the gym, there's a good chance you're lazy cleaning your bedroom, cleaning your house, cleaning your car. It's little day by day. I read a book called Atomic Habits. Fantastic book. Yeah, it's an amazing book. Seriously recommend the read. And brilliant book. It really does encourage you to make things attractive and actually make things make you allow yourself to want to do these small little habits. And you'll find that those little habits that you do, like making your bed every morning, it sounds so basic, but it's the first thing I did. As soon as I wake up, brush the bed, boom, make the bed, then I'd go brush and clean my teeth, whatever I need to do. But just that making of the bed, now it's second nature. I used to hate it. I used to hate making my bed. Now it's second nature to me. Clean the house. No one likes to clean the house. It's boring. But if you go to the gym, you come back, you do a quick mop of the house, you do a quick hoover of the house. Next thing you've got the entire day ahead of you and you've already cleaned the house, and it becomes second nature. It's the exact same with trading. It's just finding those small, unattractive habits and finding a way to, I think there's a saying called eat the frog first. It's get the ugliness out of the way with straight away, do it first, get it done, enjoy the rest of the day. And
I've heard the phrase eat, kiss the frog, but not eat the frog. Well, you're taking that to a whole new level. So quickly, I
to
just
kiss the
want to touch
frog
on
first.
this.
I don't know.
Well, let me just touch on this. So Des says, even after losses, if I followed my plan properly, I feel good.
That's how it should be. That's amazing.
Even if I win, but don't follow the plan properly, I still have an uneasy feeling. So that milestone right there, that pivoting point right there, is where my trading took on a real chapter. So I would like to congratulate you. That mindset right there is the milestone that will elevate you into an incredibly good trading position. So Andrew, you asked a really good question. We haven't got time to touch on this today. I will be back tomorrow at 9 a.m. Ask me again tomorrow. I'd love to touch on that. We're going to take a quick 30-second break. We're going to be back with how to trade like a moron from Mind Over Markets. Stay tuned.
This is different. Everyone, get your popcorn. Louise doesn't have to be the one.
You are a Paralympic and this is some advice. I'll give you some advice. We know. That's much. Dating advice. Here we go. So
I wake up every day and I check if my legs grow like it hasn't. But that's how simple I
going
am.
long and then going short and then write down exactly what your host of the Mind Over Market segment. This is how traders think, and I am joined by Jordan Mauer. How are you going, Jordan?
I'm well, Louise. How are you?
That's good. Look, thank you for letting me absolutely gruel you with all of the things that you can possibly do to not only improve your mindset, but also to sculpt mental clarity, because that is the goal. So today we have got a fascinating topic. I think you're going to love it. It is how to trade like a moron. Now, we know with comparison studies, there are upward and downward comparisons that we can make. Often people put FOMO into a complete, I must avoid this type of category. However, we know from the psychology studies, we shouldn't try to do that. We should actually see where it fits into our life. So if we make an upward comparison, it's aspirational. There's a mentor ahead of us. It's somebody that can encourage us perhaps as well in our journey, and it's somewhere where we want to be. If we make a downward comparison, we're saying to ourselves that, wow, I'm so clever. I'm glad I didn't end up like them. Oh, weren't they unpleasant expletive here? So I think that we need to be aware of where we're at with that. And it is really good with this to make downward comparisons to see who is a moron that we don't want to emulate, so that we don't have those behaviors creeping into our own trading. So how does that sound for a topic, Jordan?
Let's do it. Let's do it. How to trade like a moron. I reckon I've got a few cents to add here.
Fantastic. Now, just before we do kick off on the topic for today, I didn't quite finish about my new book. So my new book that's joined the other 5 books in my catalogue here is, of course, my new Investing Psychology Secrets. So there was a little bit extra that I wanted to talk about the things that ended up on the cutting room floor, and you can get that new book from tradinggame.com.au. I have it available now. Technically, it's not quite ready for release, but hey, I'm sure between you and me, Jordan, I can get a few extra copies here. Now, I wanted to talk about the things that got left on the cutting room floor to finish off that as a topic. And one of them was what happens when you make a huge profit. Now, I don't know, have you seen the movie Pretty Woman, Jordan?
I have.
So you'll know that Julia Roberts' character had perhaps a very endearing character to play, where she was a sex worker, and eventually that Pygmalion effect, she was transported into the world of luxury and respectability. So she went into a shop initially wearing perhaps appropriate clothing for her profession, her initial profession, and this woman didn't serve her. So this woman, she basically made a big assumption about how Julia Roberts looked, and she decided to write her off. When Julia Roberts got the nice clothes and the nice man and the nice handbags and the nice shoes and the nice hat, apparently, because that must have been in fashion, she went back to that woman and she said, "Do you work on commission?" And the woman said, "Yes." And she said, "Big mistake, big, huge." Now, for those of us who have ever wanted to insult a brother-in-law, or perhaps somebody who didn't believe in us, or maybe even an ex-girlfriend, that scene is a classic. So what does it have to do with trading? Sometimes with trading, we make a huge profit. A huge profit. Something that makes you sweat because it's so huge. Something that either, and it can go one of 2 ways, we run around practically throwing money onto the bed and making snow angels, or we suddenly get very insular and don't want to speak to anybody and we shrink into ourselves. So I was talking to Linda Bradford-Rashke about this. Linda Bradford-Rashke is now Linda Rashke. So if you've read the Market Wizards books, I'm talking about the same person. So Linda Rashke said for her first trade where she made 7 figures, everything suddenly jumped into sparkling brilliance. She was driving her daughter to karate, the trees were greener, the sky was bluer, the birds were singing, and she was just euphoric. Now, I think a lot of us want to recreate that after we've had a big hit like that. Tell me, Jordan, when you've made a big profit on the markets, what does your body do? What do you feel inside you?
I'm one of the ones that shrinks a little bit. When I've done some numbers that I've done before. It's more of a, I don't know how to explain this. I guess it's a it can't be true type thing. Less euphoric and something's not right. I guess
Yes.
in that. And then I tend to not tell anyone. I've done a lot of searching on ego, not getting ahead of yourself and stuff like that. So I really suppress it down and be like, no, was this part of the plan? Is this part of the plan? Carry on as usual. This could happen the other way tomorrow.
I totally understand, and it is something that is nice to premeditate because it can give you a guidance, but until you're in that situation, you'll never really know. So for me, I had a profit where I earned more than my final salary as a national sales manager in the one trade over a period of a few days. And you would think that would be a good thing, but it deeply unsettled me. It deeply unsettled me. So having a huge profit is something that I'd like to discuss today. I do think it's a topic that if you haven't had the huge profit yet, then you will be down the track getting that huge profit. So let's think about how to handle that in advance. So I'm going to call this the huge profit solution, and it is involving the morning journal. So for us to just have a quick refresher on the morning journal is where you write down your thoughts, you keep your pen moving, and you really don't critique yourself in terms of, oh, I shouldn't be writing that. You just let your subconscious flow. So I have got a way for us to be able to handle a huge profit and to be able to process that through our system. So the first day, you fully express what you're feeling in words. So write it all down, exactly how you're feeling. On the second day, reflect on what did you do well in the situation, but also consider if you're given that chance again in the future, what would you do differently? So what did I do well and what would I do differently? Because in every single trade, we need to consider how can we improve. And that includes a huge profit, because it could have been that the market conditions were incredibly favorable and it was very little to do with your own brilliance. So if that huge profit has come from you following your trading plan and you being diligent with your discipline, then you do deserve those rewards. You do. If it has come from a mistake, a freak market accident, a situation where you cannot replicate it, you're going to need to journal even more, because that is going to be something that can mess with you. So those first two steps, Jordan, give me your impressions. So expressing yourself and then thinking about what did I do well and what would I do differently in your journal.
Yeah, absolutely. So two things. First and foremost, most people will have a bit of trouble expressing themselves, right? They'll have a bit of trouble in how to really get that out and how to put it on paper. So my number one advice is that's you a little bit, just write. Just don't think, just literally just write, and it will come. It will come eventually. Just write what's coming into your mind and keep it going, keep it going. You will get little golden nuggets in what you've written down, and you'll be able to narrow it down and learn a little bit more. The review, so important. The review is so important. Understand whether or not this was something you've done or this is something that the market's done. And then in the event that it didn't happen or it did happen, what would you have done differently? Even in losses, in wins, I think it's always important to fully understand what's happened in order for you to get that money.
I love that, because I do think as well, it is interesting because on day 3, I'm going to suggest that you continue to dive into your emotions. So whether it be elation or perhaps that shrinking feeling that we were talking about, that you describe any remnants of those feelings. So don't re-describe what you've just described in day 1. go into additional areas. Try to be really disciplined that you just don't keep on going the same thing again and again and again, because that's not going to be where the learning is. Often on day 3, coming underneath that initial top scent, as the fragrance manufacturers in France would tell you, of a perfume, that underneath area, that underneath your area of subconscious, that can be where the true insights come from. So describing any additional feelings on day 3 and day 4, this sounds like I'm being really mean and this is why they rejected it. Okay, I'm giving you the
Let's go.
challenge yourself to explore that the whole thing could have been luck. That this was nothing to do with you, that you are not a market wizard, you are not a market god, that everything that happened was a fluke. Now, what we're trying to do is we're trying to force growth, okay? So some of this stuff that we're doing, even in these shows, Jordan, I'm aware that I make you uncomfortable. I really am, and I get that. But in order to force growth, we must be prepared to accept discomfort. So the editor decided in his infinite wisdom that this is too cruel to get people to do, that they should sit back and enjoy and stop questioning because, hey, you're traders and sometimes good things happen. But I went up against him and I said, no, if we don't put day 4 in there, then I'm not interested. So Jordan, give me your thoughts. I am harsh. I do expect people to punish themselves to grow, but I think if we don't do that to ourselves, then we're missing a good opportunity because we want to duplicate this into the future. And if we don't grow from this, then we're not improving ourselves.
Yeah. What's the old saying? Smooth seas don't make good sails. Is that the old saying, right?
I like
You've
that.
hit the nail on the head. You're not going to grow if you're not uncomfortable, if you're not challenged. And when you're in trading, you're on your own. Yeah, unless you're trading on a big trading desk and you've got people looking down or mentors breathing down your neck, being like, "Hey, what are you doing?" It's likely you're on your own. No one else is going to put in the hard work, and that's that. And I'm a big fan of it. When things happen, how much was luck? How much was skill? If you're feeling good about it, that's awesome. That's awesome. But is it a direct correlation to something that you've actively done, or has it just gone in your way? And it's very important to understand that. I'm all for it. I've been told I'm too hard on myself sometimes, right? So I'm that guy that goes in and be like, no, this isn't a result of XYZ. This is a result of this. So no, big fan, big fan. You got to challenge yourself. You got to grow. It's why I still come back to these shows, Louise. I know you put me on the spot. Talk about some emotional things, talk about some things that I haven't ever spoken about before. And I do it on a camera for everyone to see, but I do it because I'm growing and I'm learning. And that's the only way you do. Get uncomfortable, grow, learn.
Yep, absolutely. And in some ways, this book has helped me work out what is it that I'm willing to die for, because that is the other aspect that they blocked out of the book. To prioritize, we can't just prioritize based on airy-fairiness and niceness. We actually have to work out the opposite of that as well. And it was related to this day 4. What are you willing to die for? What is the thing that you are going to say enough? Where is your line? Where is your boundary? And this is an aspect that I'm so happy that we can explore. And I've got a little method for you after we finish this few days to resolve and recover after a huge profit. Day 5. Imagine that it's 5 years from now and reflect on that profit. Did that profit make a difference in your life? Or was it just one data point amongst many? Did it represent a turning point? Is it something that you could alter because that profit came into your life? And examine it from the view of your future self. What does your future self say looking back on that profit now? And day 6 is review those previous days of journaling. So I am a big believer in future self. I'm a big believer in us working out who we want to be and then step laddering our way into that future person. And I think that can be interesting when we are faced with a huge profit, because we need to learn. We need to learn from this. It's your losses teach you, but your profits teach you as well. Your thoughts, Jordan?
Yeah, every little bit of data you can get in trading teaches you something. We shouldn't just walk away like, profits, my job here is done, awesome, and not look at it and then only analyze when we're losing. Every single data point, little things that you probably don't even think of, matter if you want to improve and you want to grow as a trader. So absolutely, I agree.
Yeah, interesting. So I do have a technique as well that can, I think, assist. Now, it is a bit of a weird one, but I use this with my sister. Okay. Now, I've got 3 sisters, so I won't mention this sister's name. And I find sometimes, a lot of the time, she's quite sarcastic and cutting, and she's so clever and she's so smart and she has got an amazing career, but her words damage my tender heart. So I imagine I have a bubble around me, and so I stretch out my arms and I say, okay, there's my bubble. I can almost feel it. I can almost see it. I visualize it to such an extent. It's all around me. And I imagine her words hitting that bubble and then bouncing off so that they can't actually penetrate to my soft tenderness. Now, having that same bubble view when you've hit a big profit or a big loss, okay, that big profit or loss is outside the bubble. What's happening inside the bubble for you now? And a lot of the time when you and I are talking, I'm trying to get into your bubble, into your inner thoughts and feelings, not that which has happened to us. And this is, I think, a big part of being a trader, is working out how to make money and how to live with that. Yes.
Strange concept, right?
Yes.
Strange thing to say.
Yeah, I wouldn't think it'd be a problem. That's the editor as well. That was his thought, is that, why is this an issue for traders? This is not going to sell a book. Goodness me, mate, you haven't been in the markets. All right. So other than my editor perhaps scrapping those things and wounding me deeply, I want to cover, let's look at trading like a moron, and let's look at the things that people who don't trade well tend to do. And we'll go through some of these fairly quickly. The first one is not having a stop loss. So not having a stop loss is just ridiculous. You have to know when you're going to get out of a trade before you get in. Now, this is a core concept, and if you're winging it, if you're imagining that you can guess and you can do this on gut feel, then you are in trouble. You've got something else coming for you. And another one is over trading. Now, there is a lot of research by Brad Barber and Terence O'Dean that talks about returns, and they talk about if you overtrade, you earn less. Now, what does overtrading look like? It usually looks like a beginner to intermediate trader who happens to be male, because I'm just stereotyping here because I'm basing it on the research. I'm not picking on anyone in particular. And it's somebody as well who has got that I can't control my testosterone aspect. I can't calm myself down. I can't take a little bit of a breather. I don't know my recovery methods. So they're the types of issues that I think can lead to overtrading. So I'd love your thoughts about how to trade like a moron. First two, no stop loss and overtrading. Jordan, do you find in your information, does that replicate?
Yep, stop loss, not just knowing or thinking of an area where you're going to get out. It's always good to always have an order there as well, just because you never know what the market can print. But you got to have a stop loss. You got to know what you're willing to risk. You got to know what you're willing to lose. You've got to know how much it's going to hurt when it does go the other way, right? Over trading, absolutely. Go back to last episode. Hug yourself. Calm your heart down, right? Ground yourself, touch. Absolutely. Overtrading is a big one, especially I find in a lot of beginners. If they go on a bit of a hot streak, if they've won 2 or 3 trades in the same day, they're thinking, oh, this is never going to end. And they just continue to go and go and go. And we all know how that ends up.
That's it. Now, some other areas. Trading from gut feel, saying that you think you have got a feeling in your waters that this is going to be the big one. Unless you have been an exceptionally well-trained, long-term in terms of the longevity in the markets trader, you will not have developed a gut feel. What you were talking about is magical thinking, something that you are hoping, wishing, praying that buy, hold, pray, BHP concept, it has got no grounding in reality. So trading on gut feel. So get that out of your vernacular. Stop talking about, I had a good feeling about this one. Stop saying, I was pretty sure it would work. Look at your language, hone your language, make sure that your language is specific because that can determine your future. And the other one is no trading plan. Now, my goodness me, I am shocked by the number of people who do not have a written trading plan. Jordan, your thoughts on gut feel and no trading plan?
Yep, gut feel is tough, especially if you're a discretionary trader, right? Because it's something you're reveling with. It's something, is this a position? Is it not? Gut feeling was actually something that I journaled for a long time. I would explain why I have a gut feeling or what that feeling is when I'm entering the trade. And then I would review after 100, 200 trades, be like, well, hang on a minute. Every time I've felt really, really good about a trade, it's lost. Why is that the case? So I think it's something you can also analyze and have a look into. We had a trader last week on stream say, I guarantee this is going to turn. And it's fair to say that we ripped in. We ripped in, right? Because you that was just
pearls moment.
that's not in trading. You can't be saying things like that. You can't be thinking things like that. And then trading plan, it's a business plan. It's the foundation to achieving what you're setting out to achieve. Plan, you've got to plan everything. Whether you're a football coach, like you plan. Whether you're going through university, you plan what you're going to do. Whether it's building your career, working in a job, starting a business, everything. You need a plan. What to do, what goes wrong, where are you heading. Same with trading, right? Whether it's really in depth into exactly how you're going to get in positions, all the way out to what are the targets you need to hit in the next year, in the next 3 years, in the next 5 years to get to your goals. You've got to have a plan.
You really do. I love what you're saying here. You are definitely preaching to the choir. Now, another aspect is not understanding position sizing. This is such a key. You can take a fully back-tested system, change the position sizing, and end up with completely different results. Now, it is to such an extent that if you don't believe me, you're going to have to put some effort in to understand. A little bit of time with an Excel spreadsheet and it will do absolute wonders. If you're not fully familiar with stop placement, and if you have a lower stop that you can buy fewer shares but risk the same amount, compared if you have a higher stop, which means you can buy more shares but risk the same amount, then something's wrong here. You have not done the right thing by your own education. So not understanding position sizing and also reading the news. Yes, I'm going to get some flack over this, I know. I understand there are fundamental traders. I do. I really, really do. And I'm probably talking to one right now. But Jordan, I used to write for newspapers. So you might know that I've been around for a very, very long time. So what I used to do with the newspapers, because they were on such tight deadlines, is they would say, well, tell us how much, I'll just use BHP, tell us how much BHP is going up tomorrow, write an article about it, and we'll put it in the newspaper. I don't know how much BHP is going up. It could go down. So I used to write the same article, exactly the same article, and say BHP has gone up by amount, because you had to fill it in at the last minute. And the reasons for this are and then I'd say BHP has gone down by this amount, and the reasons are this, this, and this. And they were the same reasons with the same article, and the news did nothing. Now, I was a part of the news, I admit it, But I can guarantee you that would not have helped people make good trading decisions. Make sure people are putting their money where their mouth is. Make sure they're actually looking at a chart before they're deciding on a position, so that you're backing your information on fact, not hearsay and rumour. Jordan, you can rip me a new one about that.
Yeah,
Go for it.
I can imagine all of our chats sitting there going, I wonder how Jordan's going to respond to this, right? Because I am a fundamental trader. I do like basing my analysis, but here's the difference, okay? The data is what I care about, right? Not the opinion, not the writer, not the opinion. I care about the data. So especially in FX, where we're looking at economies, while they can be revised, I'm looking at GDP prints, right? I'm not looking at what a certain person's opinion is on that GDP print. I'm looking for the data, what the actual news is, and I'm drawing my conclusions based on those data trends, very much like how we look at price action and based on those trends. So when you say read the news, I kind of agree if you're reading opinions, right? I don't think, and it's also very important, something that stuck with me all of my life. My history teacher from year 10, I think, told me, always question incentive bias. So whenever you read an article, whenever you have a source, whenever it might be, what's in it for them to tell you and what's in it for them? What way do they want you to think? So I've always taken that forward. And whenever I'm reading articles on certain stocks, certain currencies, certain seasonal pattern, whatever it might be, I want 4 or 5 different opinions. And if I can't find anyone challenging that opinion, I've got a red flag. I'll be the one that goes to challenge the opinion. So I disagree with reading the news, right? I like understanding the data, but I agree with the element that you're going with, hey, you know, the actual articles might not help you. The data, I believe, will help you.
I love that. I'm definitely a data person, following the data and also following the money trail. So what you're talking about with incentive bias, I think one of the easiest ways is to work out who is going to make money out of this if this comes to fruition, because that will load and stack the odds of you being able to understand, why is this here in front of me? There are so many pieces of evidence that you can use to say, if I had followed the money, then it would have been revealed that somebody has a nefarious purpose. So yeah. All right, we might have to agree to disagree, but I think we're both saying the same thing.
I think we're saying the same thing in different ways. I think we're saying the same thing in different ways.
Yes.
I think the news is the key word, right? Whereas data, news is based on data. Like
that's it.
So yeah.
Now, another aspect that I think people who trade like morons ignore is ignoring the importance of psychological fitness. Now, this has got to be, I think, one of the largest. I'm not just saying that because I'm running the Mind Over Market segment for you, Jordan. I'm actually saying this because until you get started with trading, you think, how hard can this be? I personally thought, what are all these people talking about? And I've got a psychology background before I started actually trading. So I think that this is something that Jordan and I feel very strongly about. Now, I wanted to wrap up by just giving a couple of thoughts here. And Jordan, I'd love your impressions. I have very much been one to try and distill core concepts. And the core concepts that I can see, and Jordan, you can definitely debate, if it's going up, buy it. If it's going down, sell it. And keep your position sizes small. Now, those 3 things tend to keep most traders on the up and up. So, Jordan, what are your thoughts about those 3 rules?
I like number 3. I disagree with number 1 and 2. Now, the only reason I disagree with that, and I think this is where we're going to clash heads a little bit.
This is why I brought it up.
Yeah, so you're trying to poke the bear. Look, we've got a running joke with David, equity trader, and obviously I'm an FX trader. When you're trading currencies, you've got 2 assets trade against each other, and we are very range bound, right? We are just. You look at the percentage moves that we get over years. What are we doing, right? So when it comes to if it's going up, buy it. If it's going down, sell it. I think it relates more to equity. I think when you're pairing two assets against head to head and then trading those in FX pairs, there's a bit more to it than that. Personal point of view. Keeping your position size small, absolutely. Pick a size that you're happy with, half it. That's what I like to tell people. If they get overly emotional when trading, they're really struggling, pick a size you're comfortable with risk, half it, trade with that. Make it boring. Make it boring.
So work out where you stand on those rules and make sure you're not trading like a moron. Jordan, always a pleasure. Let's finish up now. And in the very next episode that I know everybody will be waiting for, we have got a related topic. So I know you're going to want to watch that. Happy trading, Jordan.